This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
I don't hear too many bullish cases for China in 2025.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Trump took steps on everything from TikTok to the southern border.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo, David Gura, and for the next 3 days, well-timed for Paul Sweeney, off on a sojourn as he is. David, thrilled to have you here because the president, somewhere in between SAC 2 and SAC 3, said, I'm going to sack the aluminium and steel world out there. When do we hear of tariffs anew?
Well, there's as much ambiguity about that as to how he's going to do this and what those retributive tariffs are going to be. But yes, he made this announcement en route to the Super Bowl yesterday, which he attended. I think the first U.S. president to watch a game in person. There he gave away some applause and some boos, equal measure for the president who was there. But
people booed Taylor.
I saw that.
American.
I saw that.
Continue.
Anyhow, indicating he's going to put these tariffs in place. We don't know when. I should say his vice president's going to make his way to Europe for the Munich Security Conference this week, and will have to face the music, I guess, as Europeans express their displeasure with whatever comes into play.
Yeah, I mean, it's a Europe feel. Kriti Gupta will join us from London. We're really going to focus on the European touch. I could go on with Gura on this. Well, for 3 days, and we will do that. David Gura and Tom Keene with you on the political economy, the economic politics of the moment. We start strong this morning with Michael Purvis. Let me get right to it. The data check it churns before CPI, before retail sales. This week, McDonald's out with their earnings. Gura, on top of that, did we darken the door of McDonald's this weekend?
No, I did not. I did walk by one, but I didn't go in.
You did walk by one. It's very good. Comp sales down 1.4% is what it says. Indications flattish, 294 with a little bit of an up dollar print. Sales growth, and we'll have to see. We'll have to see how that goes. We'll dive into that. Let's save ourselves from the Interactive Broker Studios, the Bloomberg Business Flash, Lisa Mateo.
Yeah, my kids made the McDonald's DoorDash delivery over the weekend. There you go.
Did you ever look at the receipt?
No, I don't. I should. Good morning, everyone. Let's get to futures right now. And they are advancing. Traders kind of assessing President Trump's pledge to impose tariffs on all imports of steel, aluminum. With that said, pushing up some of American companies linked to the metals like U.S. Steel, up 5%, Alcoa up 5%, Cleveland-Cliffs up 9%. So we get to NASDAQ futures. They're leading the gains up 0.6%, 146 points. We go to S&P futures up 0.4%, Dow futures up 0.3%. We have the 2-year yield at 4.28%. That's little changed, and the yield on the 10-year 4.49%, and that is little changed. To commodities, gold rising to a record. Tariff talk adding to that uncertainty in the financial markets. So right now we have COMEX gold at $2,933 an ounce. Over to oil, Brent crude $75 a barrel, WTI crude $71 a barrel, and the Bloomberg Dollar Spot Index up about 0.1%. We have shares of BP this morning up 6% in London. Elliott Investment Management said it had built a significant stake in the British oil major. BP reports their fourth quarter financial results tomorrow. And yes, McDonald's out. Their shares up about 1%. Fourth quarter comp sales higher than expected. And finally, Lowe's Hotels. Their shares are a little changed, but their fourth quarter 2024 results fell. That is a Bloomberg Business Flash. Paul and David and Tom.
Okay, nailed that. That's okay. I mean, you know, you dashed back from Berlin. Thank you for that. She was there. How was Pantera? Were they good?
No, not go see Pantera.
I heard you mention this every day last week.
Oh, yeah. Well, Lisa, you know, was like all over.
It wasn't
Pantera.
Real?
No, they played in Berlin this weekend. Lisa went over the Gulf Stream. It was great. Really worked out. Futures up 25. The VIX really says the tendency of a bull market 16. Think of all the angst out there, David. And the VIX is 16.29.
Not seeing it.
Not seeing it. Joining us now is
someone who knows why, right?
Yes. In this. His ability to synthesize a volatility study, a cross-asset report into his belief in the markets. Michael Purvis joins us right now from Tallback. And what does a 16 VIX mean to Michael Purvis?
Well, I think what it's really reflecting right now is that realized volatility, the actual day-to-day volatility, is actually really high. So if you actually look at the spread of the VIX, which is a forward-looking measure of implied volatility relative to realized volatility, it's actually pretty low. It's been quite slim over the last few weeks. So that 16, given that basically the tape's been pretty bullish, to my mind, is the risk is to the upside in the VIX, because I think that volatility risk premium should normalize to a higher level, particularly given all the confusion with policy and so forth.
Zero Hedge featured a Goldman Sachs research note that basically said the trading world was short January. Is there a squeeze coming? I mean, is there enough embedded gloom where if we work higher, whammo, we get a mother of all February?
One would expect after such a strong year, coming into the year with 22.5 times forward earnings is how we started the year. That's the top 2% of all valuations going back a decade. You'd expect some sort of processing of that, either through a horizontal, meaning sort of time-based, or vertical, meaning price-based correction, to happen late winter. And I think that if a lot of people were sort of expecting that, that's one of the reasons why this market's been really kind of like range bound, right? That's one of the forces sort of offsetting some of that bearish sentiment there.
You mentioned it being range bound, and I guess on one end of that range is enthusiasm about the economy being as solid as it seems to be. The other end is just this kind of bevy of uncertainty about tariffs and whatever Doge is digging up and all of that. How are you processing all of these kind of day-to-day developments? How's the market looking at what Tom mentioned at the top, the president kind of spouting off on the plane about something that could be so important to markets?
Yeah, Tom was mentioning our Sunday night surprise we got last night on steel and aluminum tariffs. Every Sunday night it's a surprise. It's not a surprise anymore, right? So I think and the markets are, I think they're just kind of a little bit like sort of just grinding through this incessant parade of tape bombs we're getting constantly, a lot of which are undo what they have. I don't know if they really have you can't really see through it. I would say this, though. The thing that I'm really concerned about, not so much as the markets, but the C-suite. Because, when you come into this year, you expect this big expansion of capital expenditures and growth and companies to really, sort of commit into this sort of all the positives that the Trump administration would bring in terms of deregulation, and that's pretty obvious on the banking side. But I do wonder whether there's just going to be a lot of C-suite conservatism actually coming in. If this sort of policy uncertainty lingers, it's very hard to put out a multi-year plan when you have no idea where the White House is coming.
Can you get me to March 1st?
Yeah, seriously. But I think for the markets right now, I think they're sort of grinding through it. If you look at the bond market, tariffs have been the bond market's bid on tariff news, maybe not aggressively, but it's not sold off. And what is selling off the bond market is strong economic prints and evidence of persistent inflation, which actually, sort of grounded there. So I think the bond market is doing the best it can. Tom, I will make one other comment just on the bond market, though, which I think is sort of underappreciated, which is that we talked about volatility in equities. Volatility in the bond market is really low, and it doesn't feel like it's low, and it certainly doesn't feel like it should be low, but it's actually, sort of in the middle of its long-term range, whether you're looking at realized volatility on the 2-year or the 10-year, or for the matter, the MOVE index.
Gold up $44, 2932 by one measure.
Yeah.
Mike was telling me the last time we spoke, pay attention to the MOVE index. You talk about the VIX at length. He bringing up that last time. I saw in the Times this morning an op-ed
Michael,
by
David Gura
look at
quoting the MOVE index. No one in
it's
political
a Monday, and I'm approaching it with
Cornell
gusto.
ever thought they would see Gura quoting them. It's transcendental. Continue.
We talked about the president's remarks on tariffs. We haven't talked about his comments on treasuries and the vagary therein. We're not seeing that manifest in moves in the treasury market this morning, but I saw in the New York Times an op-ed by 5 living Treasury secretaries noting the fact, and I'll quote here, "No Treasury secretary in his or her first weeks in office should be put in the position where it's necessary to reassure the nation and the world of the integrity of our payment system or our commitment to make good on our financial obligations." Tom says we're waiting for detail on the tariffs. We're waiting for some clarification and detail on what the president said yesterday about what Elon Musk has or hasn't dug up in his investigation. Why isn't that rippling out more
in the bond market? I think because it would be so extreme for the world's reserve currency to actually do something like that. That I think Trump's Treasury Secretary, Mr. Besant, is going to be aggressively saying this is not in our best interest to see sort of an emerging market type premium placed on our treasuries. That's not going to be helpful to the cause of the person trying to get a mortgage or for that matter the broader economy. So my guess is that it was so extreme that they'll story their way through and come up with a different rationale for what he was really saying.
We start strong on this Monday. Michael Purvis with us. We continue with Mr. Purvis of Tallback. And good morning on your commute across the nation. Special good morning to Philadelphia. Balchunas sleeping in.
Okay.
Got the memo.
Not on the schedule today. I know.
Well, yeah, he was two boxes over from Taylor. Good morning, Eric Balchunas down in Philadelphia. We're trying to get a phone call with him later this morning. And on YouTube, was blown away by the YouTube presence throughout.
The post-game show
the
was the YouTube
TV
show.
Hour
Yeah,
and the YouTube
pre-show.
And the YouTube.
Did you watch it on YouTube TV? You canceled your
I
subscription.
did. But I got it back. I was told there'd be divorce because we wanted to look at the ads. Lisa Mateo doing the ads here in the newspapers coming up. Michael Purvis, I look at where we are, and heaven forbid it would be Graham Dodd and Coddle, and the answer is it is about free cash flow. Do you observe a stable and growing free cash flow out there to acquire marginal shares this morning?
Well, sure. I think look, over the last few years, you've had a sensibility from the C-suite of let us solve for free cash flow. You've seen that in the energy sector, metals and mining across there. There's been a lack of embrace of, let's build it and they will come. It's more like let's generate free cash flow and our investors will like us a lot there. And I think that mentality is still there. I think with this new administration, one might expect to see more, really sort of maybe perhaps some more aggressive expansion. But again, like as I was saying, I actually think it may be going the other way. I think it may be going the other way.
I agree totally.
Yeah.
Do you have any, the slavery to share buyback, use of cash, that religion is still intact, correct?
100%. And if you were the CFO of a Fortune 50 company, why wouldn't you advise your CEO and your board that, look, this is a way where we can create effectively synthetic earnings growth. We can't promise always that we're going to be doing well organically, but we can. This is something under our control. We have the cash to do it. Our shareholders like it there, and so as long as the balance sheet and the free cash flow generation are there, why would they not continue with these strategies that are going to continue to shrink the number of their shares outstanding and see their stock price go higher? So I think that's something that's a given. I think there's always a tension between, do you allocate capital to M&A and CapEx, or do you go for free cash flow? And I think the more policy uncertainty there is, the higher the propensity is for the C-suite to go towards free cash flow and buybacks and be conservative, because you just don't know how the table's going to be set over the next couple of years.
Is it having a countervailing effect on the prospects for M&A? I think going into this year, there was this kind of generalized sense of enthusiasm that because of the Trump victory and what that would mean for regulation, we were going to see sort of happy days for mergers and acquisitions again. What is going to bring about that moment? And we were talking about sort of uncertainty in the C-suite. How much of that is sort of forestalling sort of that exuberance translating into action when it comes to deal making? Yeah, no,
I think I actually started my career doing M&A, and I will tell you, I was just talking to an M&A lawyer over the weekend about this. I think you'd expect Trump to make M&A great again, right? But after 2 years of poor deal making volumes, I think it's going to be challenging. It's sector by sector, right? So maybe if you're in midstream energy or downstream energy, maybe that stuff is more obvious. Maybe within the financials, that stuff becomes more obvious. But if you're doing international M&A, that might be very tricky, of course, right? If you're doing anything that's involved in a sector that is tied to supply chains overseas, how do you understand and frame out what the synergies are and what the risks are to your board of directors when you're proposing this M&A deal?
Part of the Michael Purvis glow. First of all, are you going up to New Hampshire again this summer?
Of course I will.
You're gonna be
that question doesn't even
ask. Are you going to be out there for 15 weeks or 17 weeks?
I know.
I mean, you even look like Henry Fonda.
Oh, my God.
Yes, no, New Hampshire is a great place to be in the summer after the black fly season.
Yeah, you got to wait for July 4th for that.
Yeah.
In the American boom, are you going to buy a new set of LL Bean boots? I mean, do we see that coming?
I was wearing them over the weekend.
I was as well.
You were as
yes,
well.
Sir.
Lisa, were you wearing your LL Bean boots over the weekend?
No.
I think
She's too stylish.
I don't have any now. I got to acquire
I
some.
wish there were an inflation index for the price of LL Bean boots because I thought about replacing them, and they're a lot more than I recall when I first went to Freeport.
Back in the 70s and 80s when I got my first pair, they used to repair them for free, automatically lifetime, and they don't do that anymore.
Yeah,
no, that was they sold a call option that they shouldn't have sold.
But that's the boom that's out there. Is at the margin we're generating over 2.x% GDP. Yeah. Do you see that continuing?
Yeah, I do.
Michael Purvis.
I do, and I think look, just to put politics to the side for a second, I would say if Harris was president, Trump were president, I think we have been in the midst of a nominal GDP shift that's going higher. There's a lot of structural reasons, really nothing to do with COVID or anything like that. These are just structural trends that have been occurring slowly and steadily, and I think I've been very constructive on the economy. I wasn't a hard landing guy a year ago, and I'm not a soft or hard landing effect here. I think what's happening here is we're really normalizing to something other than 2019, 2018, 2017. I think we're normalizing back to some other things, and there's a lot of structural forces that are going to keep inflation from getting to the Fed's target, but also they'll be growth supportive too.
I'm going to feature that on Single Best Idea today. That was absolutely brilliant. Michael Purvis, going back to the animal spirit, the nominal GDP that's out there. Michael Purvis, tall back, and thank you so much. Gerd, get him up, please, out of the chair. Michael Barr was going to take the day off, but he was so shocked at the offensive line of the Kansas City Chiefs. He came in. We got the Sikorsky out to get Barr in. I said, come on, Michael, get over here. I know you stayed up for the last.
We don't want to make him stand.
Taylor and Tyler aren't going to Disneyland, right?
No.
Okay. I figured that out. Futures up 25. A nice lift to the market, seriously. NASDAQ up 0.7%. The VIX 16.30. With our news from New York City, Michael Barr.
Thank you very much, Tom, David, Lisa. Oh, no three-peat for Kansas City. The Philadelphia Eagles dominated Super Bowl 59 as they crushed the Chiefs 40-22. The Eagles defense intercepting Patrick Mahomes twice and sacking him 6 times, the most he's ever been taken down in a single game. He says, obviously, the turnovers hurt.
I thought our team played really well. I feel like I didn't play to my standard, just with especially the struggles that I had early in the season. And so there's things that I have to get better at, and they kind of showed today on the biggest stage. And so I'm about to find a way this offseason to combat what defenses are doing to me.
Those turnovers fueling the Eagles, who were up 24-0 at halftime and at one point led by 34. Meanwhile, back in Philadelphia, fans said, I'll have some extra cheese with that cheesesteak.
Never seen anything like it in the Super Bowl, and I feel like we got it in the bag, and just kind of went from there.
Donald Trump became the first president in office to attend a Super Bowl. President Trump plans to impose 25% tariffs on all imports of steel and aluminum in the U.S., affecting major suppliers like Mexico and Canada. He told reporters aboard Air Force One that any country that has imposed tariffs on the U.S. can expect tariffs from the U.S. as well.
I'll be announcing probably Tuesday or Wednesday at a news conference reciprocal tariffs, and very simply, it's if they charge us, we charge them.
New changes coming to the way the U.S. hands out coins. President Trump says he directed the Treasury to stop minting new pennies, calling the coin wasteful, as he focuses on cutting costs. Finally, Speaker Mike Johnson said Democratic lawmakers' lack of clear leadership and vision is hampering their ability to effectively counter Republican moves and measures. On Fox News Sunday, Johnson says there's plenty of time for all the negotiation, and we'll get to that. And the Democrats, frankly, are flailing right now. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, David, and Lisa.
In the next hour, we'll feature that with E.J. Dionne with a blistering essay over the weekend. We'll talk to David Gura about that. Okay, here we go. I was thunderstruck. William Howard Taft, April 14th, 1910, throws out the first baseball pitch to Walter Johnson.
You were there.
Yes, thank you. I was stunned that no president had ever been to the Super Bowl.
Yeah, I was surprised as well. And I don't think he stayed for the whole game. Correct me if I'm wrong. No, he had other things to take care of. Had to get back to Washington, D.C. But there he was in the box. And I said to my wife, it could have been a game in which you saw a lot of him on the screen, but there was that one moment at the beginning where he waved, and I think that was it.
You and your wife watched the Super Bowl
We watched it all, and my son is a devoted Chiefs fan I don't know why he's a Chiefs fan other than a great love of Patrick Mahomes, but as I think a lot of boys in Brooklyn, he's a guy to look up to at the age of 29.
I haven't talked to Michael this morning. I mean, he got in ahead of me at 2 a.m. Your thoughts on it, on the extravaganza?
I was shocked that it was not even close.
Not even close.
I mean, it was 24-0 at the half.
Does every team go out and reestablish the run game after the lesson of the Eagles in the last 24 months?
Well, I think more. Well, by the way, Saquon Barkley only got 57 yards.
Very true.
But he was there. They were scared of him the whole time.
Right. He
They were
swayed
scared
the
of him
attention.
the whole time.
Exactly.
Just like Peyton and the Bears. The Bears are from Chicago, Michael.
Uh-huh.
It's Bloomberg's surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by BAM Mutual Insurers. Municipal bonds that finance essential infrastructure and provides guaranteed income to improve any portfolio. Learn more at Municipal Bond Credit Quality. Visit bambonds.com. All right, we've got futures advancing this morning. This is after stocks closed lower on Friday. Right now, NASDAQ futures leading the charge up 0.7%, 150 points. S&P futures up 0.4%. Same for Dow futures. We have the 2-year yield at 4.28%, down 1 basis point. The yield on the 10-year 4.49%, and that is little change. The Bloomberg Dollar Spot Index up about 0.2%. On the calendar this week, yes, inflation, retail sales data, and also the semi-annual testimony from Fed Jay Powell. That is on track for this week. Wednesday, Consumer Price Index, January retail sales set for Friday, as well as U.S. industrial production numbers. All right, let's get to some deal-making news. Hyatt in a pact to buy Playa Hotels. It's for $13.50 a share, or about $2.6 billion. It's expected to close later this year. Then TD Bank Group set to exit its entire equity investment in Charles Schwab, selling more than 184 million shares of its common stock. Schwab has agreed to buy back 1.5 billion of its shares from TD. And finally, Rivian says it will now sell the electric delivery van that it designed for Amazon to other customers. It comes as consumer demand for those battery-powered cars starts to slow. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. David and Tom.
Lisa, thanks so much. Ooh, there it is, the Detroit Lion blue button. I forgot to press that right now. Joining us in London, she stayed up, late for the Super Bowl. Kriti Gupta joins us this morning. Kriti, I look at Europe, and as David alluded to, I guess the next tariffs are sort of kind of like pointed at Europe. What does the uproar say in France and Germany about that? Is it tangible?
It's not as tangible as you would think. And it's also not necessarily because of Donald Trump. It's because for a couple of years now, you haven't actually seen tariffs come off of Europe on the steel front. In fact, under the Biden administration, they turned into quotas. And a lot of the quotas weren't even filled simply because, as we know, the German auto industry is in complete decline. It's in free fall. So a lot of these tariffs haven't actually had a tangible impact yet. Where it is going to hit is when you start to see that defense investment, because that's where Europe is trying to spend the money that they don't have. But when they do get that money, that's where a lot of that concentration is: development in ammunition, development in machinery, and that's where the steel and aluminum sourcing is going to kind of pinch pennies.
Well, let me pick up on that because we have Pete Hegseth, the new defense secretary, meeting with his NATO counterparts this week. We have J.D. Vance, the vice president, traveling to Munich to give a big speech at the Munich Security Conference. What is that atmosphere, that audience going to be like for those two officials, given what you've been talking about, defense spending, but also the prospect of there being more tariffs and this new brand of protectionism from the administration?
Yeah, I think that's fair. And I think, in fact, that visit is getting more attention and more headlines than the tariff headlines either way. And this is really important because we are less than 2 weeks out from a German election. And one of the big questions here is, what is Germany and France's role, by the way, going to be in some of the negotiations around a potential ceasefire in Ukraine? That plan from the Oval Office is, of course, going to get, to your point, a lot of attention in Munich this Friday. And that's where a lot of the concern lies. Is some of the negotiations and some of the investments, as the money around it, are happening without Europe's actual say. It's happening between Russia, it's happening between the United States, and it's happening with the forces in Ukraine as well, but not necessarily any European powers, not even with the blessing of the European Commission. That's the concern people have here.
For someone who doesn't pay a ton of attention to European elections, maybe has heard about the fact that we've got this German election coming up on the 23rd, why is it so important to the broader bloc? Just help us understand the role that Germany plays here and what that could kind of portend for other states in the European Union.
Yeah, absolutely. So I think the best way to describe it, and in terms of Germany's economic situation, is the way as one fund manager described it to me. This is basically, they're dealing with the same issues as Detroit in the 70s. Basically, declining auto sector. You're seeing a lot of kind of labor union stagflation, really something that needs a lot of investment and help from the government. The problem is the government isn't actually helping. Why should anyone outside of Germany care about this? Well, Germany is the third largest economy in the world. When we talk about defense, when we talk about assistance to Ukraine, a good chunk of that comes from German defense companies. When we're talking about a say in Brussels, again, a good chunk of that economic weight, that tariff weight, comes from Germany.
Is any of the tariff stuff, I mean, I get aluminium, that's what the British say.
Very good, thank you. Yes,
Pharaoh
thank
taught
you.
me that. I get the aluminium steel thing, but Critty, services like the things that, we jet around on, planes, transportation, hotels, Disneyland or Disney World, whatever it is in Paris. Are we going to tariff the service sector?
Do the opposite, actually. I think that's where the issue is, that Germany is too manufacturing focused. So it's actually ironic. We hear a lot about Donald Trump saying, we want to make the U.S. a manufacturing hub for the world. The folks in Germany are saying, are you sure about that? We're trying to get away from that model because we're being blown out by the Chinese in terms of overcapacity and in terms of funding. I think it's crucially mentioned the services sector because that's also a place where Germany doesn't excel necessarily. France, on the other hand, doing a great job in that, but the planes, trains, and automobiles of Germany, not really their strong suit right now.
Finally, Critty, I was reading Le Monde this morning, as I do over a Café au lait. Les Eagles de Philadelphia survolent le match et brisant le réveil de triple des Chiefs de Kansas City. Okay. I mean, does the Super Bowl have any traction on the other side of the pond?
I think they're interested in who performed. I think they're interested that Taylor Swift attended.
Yes.
Kendrick, yes. You can see I stayed up, obviously. They're interested that Donald Trump went to the sporting event, which I think a lot of Americans were surprised by about as well. But I think if you had to say what was more exciting this weekend, they'd say the rugby over the football.
Yeah. Follow that. I was, last week when I was off, I was with somebody, I used your phrase, the tots, to talk about Tottenham, and I was roundly criticized for that.
Oh, yeah.
That it's not even the Spurs, it's just Spurs.
Oh, yeah,
You've led me astray.
I have led you astray.
You've led me so astray, Tom.
Critty, you'll love this story. It starts, I'm in a bar with Mrs. Keene, and the head of PR for Mr. Levy calls me up.
Yes.
The owner of the Tots.
Yeah.
And he says, Tom, we'd love for you to come to a game. And we're like, yeah, okay. And I figure I'd be up in the nosebleed section. The place sold out, mental. No preparation, nothing. We literally went straight from the bar to the game.
Wow.
There we are, 4 rows up, right by one of the goals, when Son scored a hat trick. And literally, when I'm walking in the door, people are laughing at me about the Tots. It's Tottenham, it's the Spurs.
It's the
Good morning
Spurs,
to all of you. It was a difficult weekend. Critty Gupta, thank you so much. Greatly appreciated this morning. You mentioned Hegseth in Brussels.
Yeah.
What a strange meeting, a forced meeting, no jubilation.
No jubilation. I think it's getting what Critty was talking about a moment ago, which is sort of what is the Trump administration's plan for trying to find an end to this war in Ukraine? And, there are a lot of open questions about Pete Hegseth, how he's managing the Pentagon, but I think getting more clarity, more meat on the bone about what exactly the Trump administration's plan is for ending that conflict is something I think of acute interest to all of us, but certainly for those military and policymakers in Brussels who are wondering what's going to happen when this administration comes to the table, whenever that happens.
Is there a plan?
I don't think there is one yet, or not one that's been floated yet. So, we all recall during the campaign and the transition, President Trump saying he'd solve this in 24 hours. Obviously, that hasn't happened here, but we will get to that point at some point. We've seen Europe kind of laying the groundwork for whenever that moment happens.
You're so good at the secondary stories. I'm not sure it's secondary. Do we have a new FBI director? I've yet to bring this up on the show.
No, I don't think that we do have a new FBI director.
So it's like this week, maybe?
Maybe. There's still a number of these nominations that are hanging over the heads of a lot of senators. Obviously, the administration keen to get them through, but by no means is every person in place yet. And those who have been confirmed have been doing multiple jobs, as we've seen.
CBS had their first poll this weekend.
Yes.
And the only poll I needed to see was at the beginning of the Super Bowl. They went up, I believe, during the national anthem, and showed the president with his daughter.
Yes, she was there.
And you could feel the stadium, the electricity of seeing him there. He's polling well, to say the least.
Yeah, his approval ratings in that CBS survey were quite strong, as he was happy to point out in social media in that interview with Brett Baer yesterday. And I know you'll talk to Margaret Brennan about it later in the week, just about CBS's survey. But yes, he's feeling good despite all of the chaos and uncertainty surrounding him that we were talking about with Michael Purvis at the top. He recognizes the fact that he's still riding a wave from that election.
Yeah, we'll have to see. What are you doing in the big take this week? You're doing me for 3 days, which is.
I know. I'm reacclimating here, but we have some good stuff in store. I'll tease it over the course of the week.
You got an executive meeting like at 12 noon?
Yeah, 12:15 or something like that.
Le Grenouille. Okay, I can see it now. David Gura is with us for the next 3 days, which is really well timed. There's lots going on in Washington to discuss with Mr. Gura, including Chairman Powell. 2 days of testimony. I'm sorry, I still call it Humphrey Hawkins. It's not.
We're not allowed to call it that anymore?
No, I don't know. It's like a rule. You can't, but I do. Lisa and I can call it Humphrey Hawkins. It is a Monday. We're on YouTube. Thank you for your subscriptions on Bloomberg Podcasts. Really doing well. Thank you so much for that. From New York City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures advancing, and this is suggesting some buyers may want to get back into the market after that 1% sell-off retreat in the S&P 500 at the end of last week. So right now, S&P futures up 0.4%, 25 points. We have Dow futures up 0.4%, 207 points. NASDAQ futures, they're leading the charge up 0.6%, 136 points. We get to the two-year yield, 4.27%, down 1 basis point. The yield on the 10-year, 4.49%, and that is little changed. We have the Bloomberg Dollar Spot Index up about 0.2%. Few companies making news this morning. The Wall Street Journal reporting Broadcom, Synopsys, they're among the U.S. tech firms that may be targeted in Chinese antitrust probes. And sources say fast fashion retailer Shein offered incentives to its top apparel suppliers in China to set up production in Vietnam. That's to lessen the impact of U.S. tariffs. And then shares of T-Mobile this morning on the rise, up 3%. This is after it announced that its tie-up with Elon Musk's Starlink satellites for texting and data use off the grid will cost customers $15 a month. That's after a free testing period. And speaking of Musk, he says he is not interested in buying TikTok for now, and he has not put in a bid for the Chinese-owned app. That is your Bloomberg Business Flash. David and Tom.
Lisa, thanks so much. Had a couple emails already. Yes, Lisa Mateo will have the newspapers for us here in about 10 minutes. Right now, in between, and what a great hour this is on a Monday morning. You have Michael Purvis with us in Tallback, and now Peter Cheer with us with Academy Securities to piece together where we are. As I mentioned with Michael Purvis, Peter Cheer, there was a large institutional bet that January would be soggy, that January would be difficult. I believe it was not. What now? What is the positioning you see in the market?
One, I think you have to continue to trade this. Every time under President Trump, if things seem too good to be true, start selling. Every time things seem to be really, negative, start buying. So I think it was a really good market to trade. I think that will continue. And right now, I think markets are too complacent about tariffs. So I'm positioned a little bit bearish right now.
Peter, how are you processing what the president said yesterday? And he's calling it a news conference in his part of the plane yesterday on his way to the Super Bowl. I guess more just a media availability where he talked about the prospect of these additional tariffs on steel and aluminum. And we know that'll disproportionately hit Canada, among other countries. How do you sort of think about that in the context, kind of grander sweep of things in light of what he was saying he was going to do with Canada and Mexico and then walked back?
Yeah, so there's a lot to unpack with that. So one, I do not think he's done with Canada in terms of tariffs. I think on Mexico, he's fairly comfortable with what he got from Mexico already, which is more on the border. With Canada, when you listen to what he says, he keeps coming back. So I think he's going to go after Canada additionally for tariffs. I think that's probably going to turn out to be slightly negative. It's supply chains are well set up. And the other problem, I think right now, the markets have become very complacent. Everything Trump says is supposedly just a negotiating standpoint. Yes, probably partly true, but at some point, suppliers, exporters, importers have to start getting tired of this constant rattling of the cage, and we'll start figuring out alternate supply routes, which may not turn out to be what Trump exactly wants.
Do you have a sense of how he thinks this is likely to play out? So you bring up alternate supply routes, and one can kind of go through the exercise of thinking through if these go in place, what's South Korea going to do instead? How is it going to pivot? Does the administration grasp the way that other countries, companies in other countries will sort of pivot and try to make this work if, in fact, these do come into play?
So I think in his ideal world, he sees two things, right? We put tariffs on these outside goods. It makes American manufacturing more competitive. It will help American manufacturing. I think there's some truth to that, except if they were already that close, there'd probably be a lot more being done here. Plus, it would take time to change that. The other thing that really worries me is he becomes addicted to the revenue stream, right? So immediately you're going to get some revenue stream that comes in. He likes that because that lets him pass his tax cuts. I think longer term, that's not necessarily good. And yes, I think the one thing I've always said about President Trump is you look at his business dealings, he was a real estate magnate, but it was each project was a separate project, an entity on its own with no real kind of memory. And I think he forgets sometimes maybe that countries have memories, and all this pushback is changing that. And I think you're going to look at some of these countries, figure out ways around it.
Bring this over to investing. I mean, I guess we have a plan, we have a belief. A large part of America didn't enjoy a 3-year bull market. Good morning, Ben Laidler over in London, or Ed Yardeni, or Ralph Ancampora, and the others. Peter Sheard, is it a bull market that you can invest in for 3 years?
I think on the U.S. side right now, it's not. I think you have to be trading this. You have to be cautious. Having said that,
yeah, but
like
Peter,
value.
wait, I'm going to stop you. Lisa Mateo's not day trading her 401k.
She's working on something over there. I don't know.
I'm a little bit more comfortable, to be honest, owning value. I can get comfortable with that for the next 3 years. I think you actually want to own some European and some foreign equities right now because they are so beaten down. It won't take much for them to outperform. And if you continue to see this friction, you might not see the capital inflows that have benefited the U.S. so much over the last 3 or 4 years.
Carl Weinberg of High Frequency Economics out with a note this morning, and a line caught my eye. He wrote, "The costs of transition could dissipate confidence and lead to a repricing of financial assets." Do we have a grasp yet, a holistic grasp of what the costs of transition in the context of trade and protectionism and policy mean, or are we still trying to figure that out?
I think we're still trying to figure it out, right? The policy again, I think this is where, though, the market's underpricing the risk. It really feels to me that the market has decided this is all just negotiating ploys. Nothing much is going to change. Yeah. I think that's not going to be the case. I think there's going to be a lot more changes down the road than we expect, and that's going to be problematic. And I think on your earlier segment, you just mentioned how China's looking to, produce in Vietnam. The globe will change around this, and we don't have a coherent, consistent policy. I think it will be to our detriment over time.
I mean, let's just say that we haven't. Do you and the Board of Academy of Securities, very military, Pentagon-based, do they see China in all of this U.S. chaos? Do they see China joining different treaty organizations of the Pacific Rim?
I don't know whether we see them joining treaty organizations necessarily, but they are certainly talking to their network, right? Our view has been we have China is trying to this made by China strategy. They have a lot of ins to the autocratic, resource-rich nations across the globe because they've been collecting the resources from them. They're going to sell more and more of their products there. The one thing I think that we're just starting to see in the U.S. that I do think is optimistic is there is going to be a real focus on chip production and manufacturing here. And I think that's important. And it's the one area I think we see possible subsidies coming to U.S. business.
Okay, Peter Cheer, thank you so much. With Academy Securities, I have to go around the table. Lisa Mateo, the only one noticing that I'm wearing an Eagles bow tie.
Oh, look at that.
This morning. The butler handed it to me.
Wonderful.
And said,
Thank you, Jeeves.
I said, Jeeves, I just don't want to wear it. He said, shut up and wear it. With our news in New York City, Michael Barr.
Thank you very much, Tom, David, Lisa. Next stop for the Philadelphia Eagles, the parade this Friday. The Eagles trounced the Kansas City Chiefs 40-22 to win their second Super Bowl ever. This morning on ABC's Good Morning America, Phillies offensive tackle Jordan Mailata credit last night's win to the coaches.
So I think the coaches did a great job the last 2 weeks of preparing us for every single look we could see on offense and also preparing our defense for every single, trick play or whatever they've put on film.
By the way, Mailata is the first Australian to win a Super Bowl. Meanwhile, Eagles fans in Philly.
It wasn't even close. Wow. Philadelphia came to play, and they were on a mission, obviously.
The Chiefs had won 3 of the previous 5 Super Bowls, but failed to achieve that three-peat last night. President Donald Trump plans to impose 25% tariffs on all imports of steel and aluminum into the U.S., affecting major suppliers like Mexico and Canada. President Trump declared Sunday Gulf of America Day after his executive order setting in motion the process to change the name of the Gulf of Mexico. He signed a declaration aboard Air Force One as he made his way to New Orleans for the Super Bowl.
We're flying right over it right now, so we thought this would be appropriate. Even bigger than the Super Bowl. This is a big thing.
And President Trump said he has ordered a stop to minting new pennies because they cost more to make than they're worth. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, David, Lisa.
Last night, Lucas Shaw put out his note. All I can say, folks, is screen time from Bloomberg is absolutely spectacular. It is such a joy to read. And there he was talking about the NFL turnaround. Michael Barr, when did the NFL turn it around from 2018? What was the point when you said it's a juggernaut?
Streaming.
Mm-hmm.
Streaming is, yes.
More than betting.
People always bet. There was Benny down the street where you put your bet in. But when streaming came along, that changed the way everybody now watches the game.
Okay. Did the Gura household watch that stuff?
We watched. We didn't bet. No bet.
No betting?
No betting.
That you knew of.
That I knew of.
There was betting in our house.
At the Mateo house. Yes. Surreptitious betting at the Mateo house. From New York City, Bloomberg Surveillance.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines on Bloomberg Surveillance with Tom Keene, Paul Sweeney, and Lisa Mateo.
Special edition front pages today, Super Bowl driven with Lisa Mateo. It's brought to you by IBKR. Will the percentage of the U.S. experiencing drought conditions exceed 18%? This by February 18th of this year at IBKR Forecast Trader. The yes recently at 35%, 35%. What's your take? Trade your prediction at ibkr.com/forecast. She watched every minute, every ad. Mateo reports.
I am really feeling it this morning, guys. Okay, so fashion, right? You talk Super Bowl and everything, but the fashion at the halftime show and, of course, a pop star suite, that's all in the headlines. Okay, so Kendrick Lamar, he did the halftime show. Yes, he had the fancy varsity jacket, but what people are pointing out are the jeans he was wearing. He was wearing bleachy blue wash, bell-bottom jeans. So they're saying, is that the new thing? I mean, David, I don't know if I could see you in the fancy blue.
No, but Tom might bring them out of his closet.
Bell-bottom
Maybe you had them
jeans.
from the Boulder days. Yeah.
I don't even know what year
Last
that
time
was.
they were worn was at the sink with a Nebraska
Tacking
ID.
the dollar to the ceiling.
Continues.
Yes.
Yes, so you have Kendrick Lamar's bell-bottoms, but also Taylor Swift. Everybody was wondering what she was going to wear. So they're saying she had the double-breasted white Saint Laurent blazer.
Oh, come on. She had the YSL blazer. It will sell out today.
The bedazzled Daisy Dukes, you have to have those too, okay? And the white bodysuit, the thigh-high white stiletto boots. The theme is white, but everybody was saying, she was wearing white because maybe she was going to get engaged, and that sparked all this drama.
Wasn't the right mood.
It was
I
not.
think,
It was
in the end.
because it was the home,
was
the
in
home
white
team.
too.
Yeah.
But Miss Swift was carrying the cherry red Givenchy
Yes, a hint
bag,
of red.
according to Vanessa Friedman.
Yes, and she also wore, remember that thigh-high little T necklace that she wore in the Grammys?
Oh, yes, of
yes,
course.
she wore it on her neck. So it came back again, the T necklace
Are we
came
going to
back.
add to the newspapers today, or are we going to do the fashion report?
It's the fashion report because guess who else was in the spotlight for something they wore on their wrist? That was Tom Brady.
Tom Brady.
Did you notice it? It was like shining. The lights were
Yeah,
blinking.
it was-
It was a stunner. Jacob and Company. Do you know how much that watch cost? $740,000.
Not
Okay.
subtle. Not a subtle look for Mr. Brady.
Yeah, caviar tourbillon model. It's yellow sapphires design. I mean, it had 48 carats worth of yellow sapphires.
I never
1 carat
understood
of diamonds.
carrots.
Well,
I don't know.
Or
the strap was
broccolis.
made of alligator.
Yes,
I
it
read.
was. There you go. It glistened like pearls of caviar. That's why it's called that.
I
He's
thought
a
it was
watch
too much.
collector.
It was distracting.
It was a little bit
Can
distracting.
I just
yes.
say,
Viewers
Brady,
at home can see my swatch.
let me
here.
spend 12 seconds on this. Brady is a piñata.
Yes.
And the moment they stop coaching him and he actually talks about what he knows, like
Yes.
not scoring in the first quarter, he sounds wonderful.
When he
Yeah, I
gets
agree.
out of his head.
When
Yes.
he gets out of his head, he's like really quite good. Next.
Okay, Lucas Shaw, you talked about this, so I want to bring it up. Really good article on the terminal. Check it out in Screen Time. talking about why football, NFL, has gotten so big. So one, Nielsen counts views at bars, restaurants, and airports now, okay? But two, the league has shrunk its off seasons, and even during the off season, it keeps the momentum going, right? You have the draft, you have the NFL scouting combine, so they keep it going. And then like Michael Barr said, the expansion into streaming. But the NFL itself, the season is short, so every game matters. Everyone's on it.
The two guys that invented Game of Thrones, Benioff and the other guy, once said to my face, it was an honor to talk to them for the length of time, we thought we had to create a crescendo in the show at the last season. Then they learned they had to have a crescendo every week, twice. That's what the NFL's accomplished versus baseball. Baseball's still back in the 1930s on a train. We got 4 games in Kansas City. Who are we going to pitch the third game? I don't know. Do you have anything else quick?
What was your favorite Super Bowl ad? Because that was the one from on YouTube predicted that the top one was the Muppets.
Oh, the Muppets.
Did you see the Muppets one from Booking.com?
Yeah. I thought some were really quite good, and a lot of them I'm like, who are they talking to? I
loved it. The Meg Ryan, Billy Crystal one about the Hellman's mayonnaise.
Yeah,
that was good. Cat's Deli.
That worked. Lisa Mateo with a Super Bowl report. Thank you so much. Greatly appreciate it. There is no one else to play from Philadelphia. Harold Melvin.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What's the immediate take of a tariff war?
For the longest time, technology has been the driver of this market.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Trump declared a national emergency at the U.S. border with Mexico.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. D. Gura pulls a short straw and is in today. Paul on assignment. David Gura with us Monday, Tuesday, Wednesday into CPI, into retail sales, and McDonald's earnings this morning.
I said no PPI. I didn't want to be here for that.
Lucas Shaw is up. What time is it? 8, 7, 6. It's 5 a.m. And he's on me because I didn't know who the two partners are that founded Game of Thrones.
Benioff and
D.W. Weiss or something?
D.B. Weiss.
D.B. Weiss. Thank you so much. It was great to talk to them. I did a whole thing with the show, and it was right like at the peak. It was like, oh, this is a big deal.
Were you an avid watcher? Game
of
Thrones fan?
Yes.
Yeah,
I was an avid, yes. I really thought it was quite good. The one I've watched it all is Silo.
Haven't seen it.
Which has got a little bit of Game of Thrones feel to it, but it's very gloomy. I watch. Mrs. Keene refuses to watch it.
She's in the other room.
She's watching, whatever. But anyways, that's where we are. It's Monday morning. We got some great guests coming up. Our conversation, arguably of the first quarter, on international relations. Robert T. Kaplan will be with us here in a moment. A lift to the market this morning. Futures up 29. Gura on the tariff watch. Do we have a presidential time yet?
No, I'm looking at the inbox. No update on the president's schedule yet, but he teased it would happen today, so maybe it'll be today.
10-year real yield 2.06%. From the Interactive Broker Studios, the Bloomberg Business Flash, Lisa Mateo.
And we got futures on the ride. Traders assessing President Trump's pledge to impose tariffs on all imports of steel and aluminum, and that's also pushing up some American companies that are linked to the metals. Companies like U.S. Steel up about 7%, Alcoa up 2%. We have Cleveland Cliffs up 9%. Meanwhile, shares of Nippon Steel slumped the most in 4 months. They're down about 0.5% in Japan. This is after a summit between President Trump and Japan's Prime Minister kind of sparked some uncertainty over the company's plan to acquire U.S. Steel. Trump said Nippon Steel can't have a majority stake. Let's get to the market. So NASDAQ futures up 0.6%, 147 points. Dow futures up 0.4%. Same for S&P futures. The 2-year yield's 4.28%, down 1 basis point. The yield on the 10-year 4.49%, and that is little changed. Over to commodities, have to point out gold rising to a record $2,000 $1,928 an ounce. That's for COMEX gold. We go over to oil. Brent crude, $75 a barrel, up more than 1%. WTI crude, $72 a barrel. We have the Bloomberg Dollar Spot Index up about 0.1%. Shares of BP, they're up about 6% in London. The reason why? Well, it's after Elliott Investment Management was said to have built a significant stake in the company. BP actually reports their fourth quarter financial results tomorrow. To earnings we go, and McDonald's, their shares up 1%. Its sales rose in the fourth quarter. Growth in its international business, that actually made up for a drop in the U.S. That is your Bloomberg Business Flash. David and Tom.
Lisa, thanks so much. This could be truly an hour conversation. David Gura and Tom Keene with Robert D. Kaplan. Everyone knows my affinity for his realist international relations. The body of work is absolutely jaw-dropping. Years ago, my book of the summer was The Return of Marco Polo's World. My book of the year last year, a wonderful 280 pages, The Loom of Time Between Empire and Anarchy. He has been ferociously writing Robert T. Kaplan and the must-read Wasteland, A World in Permanent Crisis. David Gura with Robert D. Kaplan.
And few bring in sort of reference to history and art and writing with original reportages as well as he. Robert Kaplan, great to speak with you this morning. And I confess I was thumbing through the galley of your latest book, Wasteland, A World in Permanent Crisis, while I was covering the G20 Leaders Summit in Brazil just a few months ago. And it was such a strange moment at which we were looking to see what President Biden might say or do. He really stepped back and didn't say much of anything during the course of that gathering. And we saw kind of the reconfiguration in real time of alliances on the ground there in Brazil, the role of America being questioned and other countries coming together in new ways as a result. Help us understand the moment that we're in as we hear so much about what's going to happen here to the rules-based order, to the way things have been for so much time here as we see a President Trump returning to the White House and espousing the protectionist policies we first saw just a few years ago.
Oh, thanks for having me on. I think we're at the end of the post-war order. Post-war, I mean post-World War II, but also a few decades after the end of the Cold War. We've had the same international order since 1945, essentially. The United States has been an empire, in reality since then. And you see it not only with Trump's lack of interest, not just making demands on NATO partners, but his lack of interest in the alliance in general. And the alliance, of course, rose out of the ashes of World War II. We also see it with his attempt to close down the U.S. Agency for International Development, USAID, because that too has been a pillar of the post-war order, even though most people until a few weeks ago didn't really know much about it, because it was through USAID that American foreign aid to countries throughout the developing world was channeled. So you had hard power through NATO and our Pacific alliances, and you had soft power through USAID. Trump is going after all of that. It's not that he's an isolationist. That's absolutely wrong. Trump engages with the world. What Trump is doing is he's adding another layer to Manifest Destiny. Manifest Destiny used to be about America conquering the West from east to west, from the East Coast to the West Coast in the 19th century. Now he wants to expand Manifest Destiny north to south, from Greenland to the Panama Canal, from the Arctic to the tropics. He sees a world of regional rather than an American-led post-war order, he sees a world of regional geography-based alliances with China, the United States, etc.
I want to come back to that in a moment, but picking up on something you said a moment ago, and that is him kicking that leg of the stool, the soft power leg out from the stool. What are the consequences of that? I mean, we've heard from Samantha Power, the most recent head of USAID, making the case for preserving that organization and keeping its good work going. Atul Gawande, who worked there recently as well. I don't know how much that's resonating, but what are the consequences of losing that focus on soft power?
I think they're immense, really, because soft power you need when things are not going well, when you're not on top of the heat, when you have, soft power is influence in countries, having connections in countries, knowing people, because you're working there, you're doing things in case of a hostage crisis or some sort of crisis. You always have a phone number to call, people It's about building relationships. And all of that would go. Just a word on AID. You can make the case that AID has not been managed as well in recent years. However, the way to deal with it is the way that tough Republican presidents of the past dealt with it, like Ronald Reagan and others, by fixing it, by putting in real hard-nosed business person types to run it.
Robert Kaplan with us, folks, in celebration of his new effort, 200-some pages, Wasteland. Gura read it in Brazil. I haven't, to be honest, read it, but top of the pile right now. The Loom of Time, from Morocco out to Persia, was spectacular. My book of the year last year. Robert Kaplan, E.J. Dionne alluded to this weekend in the Post, but Richard Nixon in 1962 was an author, and then he enjoyed losing as governor of California to Pat Brown. He was at his bottom. What comes after Trump? Have you framed out in your mind that this, let's assume he's not going for an FDR 3 terms, but after President Trump, what next for our politics?
We've had first of all, one of the problems with America in terms of American power and America's trajectory is that the center is gone, rather than a center right and a center left governing the country, where presidential elections were not existential. You now have a progressive left and a populist right. Neither seems to talk to the other. I think after Trump, what you're likely to get is another populist right regime, or go back to the progressive left. The real story in American politics is the destruction of the center, the destruction of the political center, which is partly the result of the end of the print and typewriter age and the beginning of the digital video era, where news is not in the middle, nuanced. It's all about passion and anxiety and short bursts of simplicity through social media.
And David, I want to point out from Berkeley, Paul Pearson and Eric Schickler. Folks, for those of you in the markets where you want one read here, it's Kaplan, really accessible, Wasteland or The Loom of Time, and a little more dense. Paul Pearson and Eric Schickler, their book Partisan Nation, is shocking in describing what Dr. Kaplan just mentioned.
I hear you saying that the center is gone, and I can't help but think of the poem from which your book takes its name, of course, The Wasteland by Eliot, and how that's always been one we read in complement with or in conversation with The Second Coming by Yeats. Of course, center cannot hold, and what I'm very curious about is, and I've thought about it over the course of the weekend, last week as well, is the role that Elon Musk and others from the tech industry are playing now in the governance of this country and sort of setting the policy direction of the United States. It's something that you touch upon in the book, but I wonder sort of how what we've seen over the course of these last 4 weeks has advanced your thinking on that relationship between Silicon Valley, what we identify as genius or technical facility, with managing this country, with setting its direction, and how perilous that might be.
Yes. The late Harvard political scientist Samuel Huntington said that America was always great, not because of its people, but because of its institutions. The separation of powers, not just in Washington, but between county, federal, and state, out in the countryside. It was institutions that made America great, and the sanctity of them. What we're seeing with Elon Musk is an erosion of institutions. More and more executive orders. This didn't start with Trump. It started with Biden and even before that. But more and more executive orders, the increasing power of the executive, and the executive in more and more collusion with oligarchs, super rich people.
But then over the week, so they were all at the Super Bowl. Robert Kaplan, with what you just said, I think everybody of all political persuasions on this morning commute across the nation are simply saying, where's the legislature? Where's the judiciary? Do you assume that there will be checks and balances into March or April?
I'm not sure. I just know you can devise the most brilliant constitution in the world, which the founders did through the Federalist Papers. But they said it, that we can devise the greatest constitution, but it all ultimately comes down to human character. To the stability of people, to their ethics. If you have people who are irrational, unethical, or in some way do not have real standing, moral standing, the best constitution is not going to help you.
I have seen you recently described as, variously here, a pessimist, a tragic realist, and a Hobbesian. I wonder what gives you any optimism here about the continuation of the American experience in light of the reading and work that you did on this latest volume.
What gives me optimism is that because America is a boisterous democracy, it's gone through these periods before. Stylistically and in other ways, this is not that much different from the Jacksonian upheaval of the early 19th century when Andrew Jackson, a rough-hewn, unsophisticated, only partially ethical frontiersman came out and wiped out the regime of the very effete aristocratic people from Massachusetts and Virginia, and the country went on. It went on to a new burst of development and dynamism, etc. So it's a bad bet to give up on the United States completely.
Robert D. Kaplan, I have to talk here about your loom of time, and I've just got a minute to do it. If you were to write an epilogue of the Middle East, of Eurasia, from Morocco over to Persia, what would you write of today?
What I would write up today in the loom of time, I did not cover the Israel-Palestine issue, and that was good because I probably would have gotten it wrong and the book would have been dated. But I would obviously have to write about that, what has happened in Gaza. And I would just say that the big question out there, now that Israel is dramatically weakened, Hezbollah, Hamas, and the Houthis in North Yemen, the biggest question out there is the future of the Iranian regime. Because if the Iranian regime were to implode in some way or fashion, it would be a world historical event that would change the Middle East.
I got 8 more questions. How many do you have?
Many more as well. We could
Michael
do the hour.
Barr, do you have more questions for Robert Kaplan?
Oh, he's too smart for me. I'm sorry.
He's killing it. Robert Kaplan, thank you so much. Too short a visit. We thought we'd do that, folks, to frame out where we are X number of days into Trump's second administration. Robert Kaplan, in celebration of Wasteland. Gura is the only one on the planet who's actually read it, which is very cool.
It is very readable, and I commend it to everybody. You as well, Tom. Yeah.
I can't say enough about his work. I'll do that out on social here in the coming days. Robert Kaplan with us with all of his affiliations, including Eurasia Group. Kaplan lifts the market up 23 now, up 31. With our news from New York City, Michael Barr.
Thank you very much, Tom. David, Lisa. Fans shouted, "Fly, Eagles, fly," from the stands. The Philadelphia Eagles crushed the Kansas City Chiefs in the Super Bowl last night, 40-22, and it wasn't even that close. Eagles offensive tackle Jordan Mailata tells ABC's Good Morning America it still hasn't completely sunk in.
The best way I could probably do it is it doesn't feel real. I guess the approach that we had this week was just kind of treating it like the next game. And so now that it's over, I don't know what to do.
The Chiefs had won 3 of the previous 5 Super Bowls, but failed to achieve that three-peat last night. Advertisers turned to star power for some of the most expensive ads ever shown during last night's Super Bowl. About 80 Super Bowl spots cost a record $8 million for 30 seconds. Actor Matt Damon and soccer sensation David Beckham toasted Stella Artois.
You drink Stella. I have taste, David.
Another ad that had people talking, the Hellman's Mayo commercial with Meg Ryan and Billy Crystal. President Trump says he'll announce 25% tariffs on steel and aluminum, including from Canada and Mexico, that's imported. We get more from Bloomberg's Laura Davison in Washington.
The thing to remember about tariffs just broadly is Trump does view them as a negotiation tool, and he can always, either dial up the level or dial down the level of the tariff, or as well move the imposition date. So there's a lot that he can do if he feels that he can extract something from another country in negotiations.
Bloomberg's Laura Davison. The president also says he'll announce reciprocal tariffs on countries that tax U.S. imports. And President Trump also said he is serious about wanting Canada to become the 51st state in an interview that aired Sunday during the Super Bowl pre-show. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, David, and Lisa.
I'm glad you brought up the ads last night. USA Today does a great measurement of the effect of the ads. And it's, to go to Robert Kaplan, it's like there's 2 Americas out there. There's a group that get all teary-eyed because a damn horse is pushing a beer keg around. And then there's another group looking at smart aleck ads. I have no idea what they're talking about. I'm like, who wrote this thing?
These are AI ads.
AI ads.
Sure.
That make no sense at all.
You're more of the Harrison Ford driving the Jeep man.
I don't know. It doesn't matter what I am, but like Kendrick, he's getting rave reviews. I thought the thing with the flag was really spectacular. But what percentage of America doesn't know who Kendrick Lamar is?
We should rip up the script and do an hour with you dissecting the halftime show.
Yeah, well, Barr's bringing it up. Michael, what do you think? To me, it's like there was a polarity out there that we'd never seen in a Super Bowl.
It's weird. Yes, Kendrick Lamar, he did a good job, but it depends on what side of the fence you're on. Because some people are saying, slam the whole thing. Others loved it. It was almost like there wasn't any in between.
And like The Weeknd right now, I believe Mike Dean, his engineer in Force, said he did 1 billion streams of the new album, like literally in the last week and a half.
I like how you're on a first-name basis with Kendrick.
No, I'm ignorant. I mean, I'm just, to me, it showed the polarity.
Yes,
of the country.
No, you're right. And as Robert Kaplan said, the center is gone.
The center's gone, and it was a center. Well, actually, the center got a penalty in the Super Bowl. I noticed that. Bloomberg's surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment. Offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. All right, well, we've got a rebound from Friday's pullback. Right now, we have NASDAQ futures up 0.7%, 157 points. S&P futures up 0.5%, 30
There's green
points.
on the screen. There's Eagles green on the screen.
I should have said that. You stole my line. The 2-year yield at 4.27%, down 1 basis point. The yield on the 10-year, 4.49%, and that is little change. Over to the Bloomberg Dollar Spot Index. That's up to about 0.1%. On the calendar this week, we've got inflation, retail sales data, also that semi-annual testimony from Fed Chair Jay Powell. Deal-making news. We'll start with Hyatt. It's in a pact to buy Playa Hotels for $13.50 a share, or $2.6 billion. It's expected to close later this year. Then TD Bank Group set to exit its entire equity investment in Charles Schwab, selling more than 184 million shares of its common stock. And finally, I thought this was interesting. There is a tequila price war. The Wall Street Journal says demand has cooled. Drinkers want cheaper pours. So we have Diageo's Casamigos dropping their price if you're going to shop for that. I actually prefer the Rock's Terramana, but that's just my opinion. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo.
So,
that is a Bloomberg Business.
Have you
Flash.
compared shots? Yes. I'm sure this is at a beaches resort. Have you compared shots, Lisa, of Clooney's tequila versus the Rock's tequila?
I have.
Wow.
Why did I know
A tasting
that?
flight.
But I have a little bit of skew. You know, my affinity to the Rock, just kind of the taste. Yes,
Where was the
definitely
Rock in
goes up.
ads this year? I mean, I expected him to be in the Budweiser
He's
commercial.
busy. He's doing Moana too.
Yes. Have you seen that yet?
No.
He's got to keep promoting it.
When you went to see Moana 2, what did you top tick at the theater? Like, you went through $100.
No, more than that. I mean, we went to this theater that Alex Steele, I know, goes to as well in Brooklyn, where you can have a full meal and
champagne and
a full bar as well. And there were themed drinks and themed
There were.
meals. And I availed myself of all of them.
the children got you home. Here's what we're going to do. We had Robert T. Kaplan in to keep Gura happy.
Thank you for
It's
that.
the only reason he came in today. Because we do economics, finance, investment, international relations. Now I got to do the Super Bowl. I got to do Kendrick Lamar. But we got to talk to Damian Sassower first about the markets. Monday note, you're writing it last night, watching the Eagles get it done.
He had
What's
some
the
downtime
state
to do it.
of EM now, given the first days of the Trump administration?
Well, I think there's been a lot of focus on the fact that U.S. tariffs are going to be inflationary for the rest of the world. And, that might very well be true. But certainly when it comes to China, it's going to exacerbate deflation. And so what we're looking at is China's holdings of U.S. Treasuries and how they've come down $300 billion since the pandemic, which is a massive amount of suck from the system, so to speak. And we're seeing Asian central banks that are most linked to China, like Malaysia, Thailand, South Korea, their currencies are getting hit and hit well. And I think that deflation is going to get exported to those economies first. Right. And yet those economies are cutting rates in the face of it.
And this is your wheelhouse, folks. You see EM strategists, but far more, it's using the Bloomberg. Do you see an elasticity to the Chinese renminbi where they join Thailand in depreciation?
Wow. Well, I think, right now what the folks in Beijing are trying to do is set the FX at 717, I think, is where they fix it. But really, the market's trading at 730. And I think there's more weakness to follow. And by weakness, I mean a higher dollar yuan. 740 is the number that people are looking at.
Right.
For us, we're looking at 1.6%. That's the yield on the China local 10-year. 1.6%.
So what does that mean?
Who on earth is going to reach into their pockets of dollars and euro and yen and basically invest it to carry in a currency like China yuan when yields are that low? So they're going to have trouble drawing in investment from offshore. Right. And now with the pressure coming from the U.S. and the fact that the U.S. consumer is being lost to them, where are they going to replace their exports? They're going to look at other emerging market nations, such as those in Asia, and that's going to kill their currencies.
I looked last night at New Orleans, and I thought like the trombone America the Beautiful was beautiful, and the whole, the celebration after that agony of a number of weeks ago, over across the Gulf of America to Miami.
Yes.
Fold in South America and Latin America in your EM work, given the boom economy from Miami to New Orleans.
Well, what's interesting is we're seeing actually central banks in Latin America actually hike rates. We talk about Brazil, but it's also Uruguay. I mean, they just hiked to 25 basis points. I think they're
pronounce, if you have three Bloombergs, Not Uruguay.
Uruguay.
It's like, okay, continue.
Okay, thank you. Look, I think what you have to look at is we have central banks in Latin America like Peru and Uruguay and Chile, and they're all looking, if you look at the forward strip, people are expecting them to hike, whereas you have, again, in Asia, central banks are expected to cut. And I live in a world built on rate differentials, Tom. That's the only way that, you can convince me to invest abroad. And, when rate differentials are working against you in Asia, it just doesn't look good for those currencies. Whereas in Latin America, which has gotten beaten down pretty significantly because of the inflationary pressure, yields are higher, you get more cushion, you get more carry cushion, and I think it's probably a safer place, if I can even say that on air, to invest your money.
Damian Sassower here, and of course we're thrilled at his commitment to what we do at Bloomberg Radio and Bloomberg Business Sports. David Gura to Damian Sassower on the Super Bowl.
What do you think?
Before we get
when did Aaron Rodgers start playing for the Kansas City Chiefs?
One more question. I brought this up earlier. Carl Weinberg writing about a moment of transition here and Trump trying to engineer all of this. What's your sense of the length of that? So, if you look at potential steel and aluminum tariffs, South Korea is going to continue what it has been doing, which is to pivot, as you've been talking about, look for other markets for its metals. I assume we would see that with semiconductors. As these get layered on, how long does that play out? How do you think of the end game of this of the reciprocal tariffs that we're going to hear announced?
David, having lived through this the first round, the announcements and then the subsequent postponements. That's going to be ever enduring and never ending, right? So you have to learn to live with that. But I think if you look and you take a page out of what we saw in Japan with Prime Minister Shiba visiting Trump just this weekend, my goodness, he played it perfectly, right? Give him what he wants. Feed the ducks while they're quacking. Oh, you want more oil? Here you go. You want us to buy more defensive equipment? Here you go. I want to help make America great again. Sure, I'll change the Gulf of Mexico to the Gulf of America on all my maps if that makes you happy, and it will. And it'll just take them out of the heat, out of the crosshairs for a minute, right? And allow them to focus on Europe or something else. And I think that's going to be the playbook you're going to see from a lot of countries going forward.
I got to go to your expertise because Damian really spends a lot of time on this. Did the NFL learn yesterday that the running game is back?
Yeah, right? I think so.
This winter,
yes, I learned that.
Every NFL team going to say, we got to run?
I think if you look at running backs now in the NFL, and they've gotten so devalued, this. Look at these contracts. Compared to receivers, my goodness, right? But I think what you're seeing is a lack of talent at the quarterback position, and that's going to create an onus on the running back to carry a team or carry an offense forward. And I think you're seeing a little bit more of that. Certainly, Saquon Barkley is the best at his position right now in the NFL, so you saw a bit of that yesterday.
My best moment was when Barkley caught a ball off to the right, and he was so clumsy. He rolled over, and Brady was laughing at running backs catching a ball. To me, it's like old-time football.
But I think it's the running quarterback, which is where we're going here. I think that is going to be an absolute prerequisite going forward for the NFL because you can see, look at the tush push. You've got Jalen Hurts.
The tush push.
Yeah, it's how they
like
score
the
at the goal line.
Yeah,
exactly. The Uruguay
That's the dance in Uruguay.
Oh, my God, David. I can't believe you just... Okay, that's a great corollary. I think the running game is back in the NFL. And look, that halftime show left me wanting.
You saw Kendrick Lamar when he was nobody.
Well, my son is still a big fan, Jack. We are Kendrick Lamar fans in my household, but
before he won a Pulitzer Prize, he saw him win.
It's tough. I'm comparing him to Prince, and I'm comparing him to Michael Jackson and Bruce Springsteen, and all these people who have come before him. These halftime shows, which were epic, and that one just didn't do it for you. Didn't do it for me, unfortunately. No. I had to struggle to really get all the lyrics.
I said earlier my son is a big Chiefs fan, but if I were to parachute in not knowing anything about this season, it would seem like a woefully mismatched game. So I want to know what you think they did. What did they underestimate or not get right?
I think there were a lot of very close games the Chiefs played all season long. I think the refs bailed them out.
This was not the Chiefs of last season.
I think they were exposed. I think there were a lot of very kind of controversial calls throughout the course of the season that went in the Chiefs' favor. I don't want to say that they were exposed, that they weren't deserving to be there, but it just seemed to me that this was kind of something that was waiting to happen. I thought the Chiefs were going to win. Full disclosure, I would never bet against Patrick Mahomes and Andy Reid and the NFL referees, but it looks like everyone got exposed on this one.
Somebody out on YouTube, how did Damian do this year in the rotisserie thing?
I actually went on rotisserie. I didn't do well. I learned my lesson. I need to draft more running backs. But here's what I did learn. I learned that the box pulls during the Super Bowl can actually bring you back a little bit. I actually won on 2 box pulls yesterday, so it's feeling a little.
What?
the box pools, the Super Bowl box pools, where you get the end of the quarter and the end of the half.
Brian Egger is going to join us a little later in the show.
Brian
we can
Egger's
bring that up
gonna
again.
Is that true? Yeah.
Yes, we'll have
He's
him
the
on.
best.
And
He could talk about FanDuel,
talk
and
about
DraftKings.
gambling, and
This is great. Seriously, we make jokes about it, but every time you're on about football, I learn a lot because
who replaces Aaron Rodgers?
You know what? I asked that question to everyone yesterday, and I think the favorites are, if you can believe this, Tyrod Taylor, who's the backup now, but Justin Fields. Everyone can see the Jets have an Aaron Glenn-led team with Justin Fields at quarterback. I mean, I think I can't believe I'm saying it. I think that might happen.
Wow.
But so it's just Jet fans' misery.
Optimism going into the new season.
Yeah, it's going to be a tough one. Sorry.
Get some sleep. David Cesar, thank you so much. Driving all our EM coverage. Important there on the resiliency of the Chinese yuan. Futures up a big 36 points. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures in the green this morning, suggesting some buyers may want to get back into the market after that 1% retreat in the S&P 500 at the end of last week. Checking with S&P futures right now, up 0.6%, 36 points. Dow futures up 0.5%, and NASDAQ futures up 0.8%. The 2-year yield at 4.27%, down 1 basis point. The yield on the 10-year 4.48%, and that is little changed. We have the Bloomberg Dollar Spot Index. That's up about 0.1%, and have to point out commodities because COMEX gold rising $2,927 an ounce. We have a few companies making news this morning. Fast fashion retailer Shein, sources say it offered incentives to its top apparel suppliers in China to set up production in Vietnam to lessen the impact of U.S. tariffs. And then you have shares of T-Mobile. They're up more than 1%. It announced that its tie-up with Elon Musk's Starlink satellites for texting and data use off the grid is going to cost customers about $15 a month. And finally, Novo Nordisk Ozempic, other weight loss drugs. They're sparking this boom in cosmetic surgery. The Wall Street Journal says users are using body lift procedures to tighten their sagging skin, cost between $20,000 and $50,000. That is your Bloomberg Business Flash.
So I saw this. After you get the Ozempic thing going, then you have to do plastic surgery?
Well, they lose so much weight that their skin sags. You hear like the Ozempic face. That's like one of the nicknames out there.
A guy that I follow, Berg, who's quite good, actually, and it's all science-based in that. He had a video that was blistering. Ooh. I mean, I don't have an opinion, folks, other than clearly I'm not on Ozempic, unlike Gura.
He doesn't have to worry about Ozempic face, no.
What are you laughing about?
Nobody's laughing.
Oh, the controller just woke up.
No, sorry.
Okay. But Dr. Berg was blistering about the muscular effect.
Well, it happens very quickly. That's muscle. Part of it, right? It's the rapid loss.
I don't know. I don't know. Thank you, Lisa. Greatly appreciate that. We're a bit off the rails today because of the Super Bowl.
Because I'm here.
The honor of having Robert Kaplan with us in his book, Wasteland. Let's get back on track. No one better than Dan Skelly of Morgan Stanley and Wealth Management, of course, driving all of their thought. You sit down with Lisa Shallett, Ellen Zentner, and the crew, Dan Skelly, and do you have to rewrite the 2025 report now? Are you changing your allocation? Are you changing your tone after our political economics of January and 2 weeks of February?
Good morning, Tom. And listen, we are certainly monitoring some of these new developments, but to be candid, a lot of them dovetail with some of the themes that we expected coming into 25. We're seeing the American exceptionalism consensus challenged on two fronts. Number one, it's the challenge related to technology leadership and competitive ideas there, as you know, coming from China in terms of new entrants, or it's just simply crowding and people looking for other industry themes. And secondly, it's still this known unknown of fiscal policy iterations and what effect does that have on inflation and rates.
You know, you bring up the challenges we've faced, and I've almost forgotten that, 10 days ago we had this DeepSeek thing happen and threatened to kind of scuttle or invert the thesis that everyone seemed to be reading from. What lessons did you learn from that moment just about, yes, American exceptionalism, but also just that kind of prevailing narrative about where the market's headed?
So listen, I think you're right. It feels like people have DeepSeek amnesia already, and it hasn't been that long at all, frankly, to your point. But a couple things to mention. So number one, there's still a lot of ambiguity related to how this output was synthesized and created. We've now seen a little bit more detail related to potential distillation and using other models and some of the fine print, not including further or previous research costs, et cetera. So look, I think on the one hand, the market's going to want to try to simplify and say it's an either or situation. Either the DeepSeek low-cost threat is the full way forward, or the American hyperscalers and the capital spend thesis has no end in sight. And frankly, I think it's a bit gray. I think it's more in the middle, with the net effect in any scenario just being more adoption and more productivity-based AI application in the future.
Dan Scully, let me double barrel this question. I want you to take it over to ETFs, which is all the rage. But within your asset allocation, do you tilt more active management or stay with the conventional index funds?
So, Tom, last year was a challenging year for active. Only 35% of active managers outperformed. This year, right out of the gate in January, something like 60% of active outperformed their benchmarks. And we think that trend has legs throughout the course of the year. To answer your question first, we think it's less of a Mag 7 year, less of a beta trade in contrast to the prior 2 years. Second, we're going to see more volatility related to not only technology narratives, but fiscal policy. So we think within that volatility spectrum, there's going to be ways to make money actively.
Okay, well, I know you did yesterday with the 60-40 bet on the Eagles and the Chiefs. I don't know how that worked out, but Dan Scully, is 60-40 dead?
It's not dead, but it's certainly seeing some challenge and seeing some exhaustion related to the correlation, no doubt. Tom, you're right to bring it up. One theme that we've started to advocate more is thinking about other sources of income streams that have real asset leverage, whether that be infrastructure, whether that be commodity or pipeline. Listen, some of those trends, as you know, intersect the build out of AI, which according to many of the American tech CEOs in the last 2 weeks of earnings reports, is still going in earnest. So we still think infrastructure could be a plausible idea in lieu of traditional fixed income.
Dan, thank you so much. Dan Scully there with Morgan Stanley. What a relief, David, just to get back on market talk.
Yeah. Well, it's hard. It's hard given the noise, but it does seem like the market is seeing through it or wants to see through it in terms of what we're seeing on the tape.
But the tape improves, up 25, is now up 34, up 0.6%. The NASDAQ up 0.9%. I mean, the level on the Dow, 44,665 on futures, indicates the lift. With our news in New York City, Michael Barr.
Thank you very much, Tom, David, Lisa. No three-peat for Kansas City. The Philadelphia Eagles dominated Super Bowl 59 as they crushed the Chiefs 40-22. The Eagles' defense intercepting Patrick Mahomes twice and sacking him 6 times, the most he has ever been taken down in a single game. He says, obviously, the turnovers hurt.
I thought our team played really well. I feel like I didn't play to my standard, just with especially the struggles that I had early in the season. And so there's things that I have to get better at, and they kind of showed today on the biggest stage. And so I'm about to find a way this offseason to combat what defenses are doing to me.
Those turnovers fueling the Eagles, who were up 24-0 at halftime and at one point led by 34. Meanwhile, back in Philadelphia, fans said, hey, I'll have some extra cheese with that cheesesteak.
Never seen anything like it in the Super Bowl, and I feel like we got it in the bag, and just kind of went from there.
Donald Trump became the first president in office to attend a Super Bowl. President Trump is suggesting that Elon Musk's government efficiency team has found irregularities in Treasury Department data that could lead to the U.S. disregarding some payments. We get more from Bloomberg's Laura Davison in Washington.
The DOGE effort, this Department of Government Efficiency, in the executive order, it allows Musk's team to send 4 people to every single agency across the federal government. So Trump in his comments suggested that Musk would be going to the Education Department next. It's not exactly clear what he meant because there are already DOGE staffers at the Education Department. He perhaps meant that Musk personally would be going there next. He also mentioned the military as a further target for the DOGE effort.
Bloomberg's Laura Davison reports a federal judge has temporarily blocked DOGE from accessing some Treasury data and ordered the information it's already gathered to be destroyed. President Trump announced overnight that he's instructed the U.S. Treasury to stop minting new pennies. The president says it costs more than 2 cents to make a single penny, calling it wasteful. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg Tom, David Lisa.
In the old days, in February, you read Peter Gammons in the Boston Globe, read Worldwide on baseball. Now you read Pete Abrams, just killing it this weekend over at the Globe. Does Detroit have the best rotation in more than a decade? Scooball, they got Jack Flaherty back, and they got a rookie right-hander, Jackson Jobe, is it? I mean, they look like they're on fire. He says it's the best since a guy named Verlander and a guy named Scherzer and Anibal Sanchez. The Tigers look good this year.
They look good. Surprisingly, they looked good last year, but this year, now I'm expecting something with this rotation.
Because they were like the highlight of the autumnal season.
Yeah.
I mean,
like I said, when you start picking up players,
baseball talk,
and it is more than what the whole money was that you had last year. I mean, this is something.
Did you talk to Mr. Rubenstein? Are we going down to Orioles for Orioles Yankees?
He said you drive.
I drive. No, I said we'll take the Gulfstream.
Oh, okay.
We will see. Baseball talk. It's Bloomberg's surveillance.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. David Gura in for Paul Sweeney, having a good old time of it. Lisa Mattea on fire today, I should say, with the reporting on the Super Bowl. Bloomberg Surveillance this morning. We're brought to you by IBKR. Will the year-over-year change in the U.S. PPI exceed 3% in this month of February 2025? At IBKR Forecast Trader, the yes was recently a large 39%. What's your take? Trade your prediction. Do that at ibkr.com/forecast. It is widely understood I don't have a real job. I mean, Gura tells me this on a daily basis. Lisa hates me for it. But none of us work like Joe Doe. Here's the reality, folks. If you are the metals and mining reporter for Bloomberg News, you work a 28 or 30-hour work week unless there's news. So last night, you had some guac in your hand and a Budweiser, and the president ruined your Super Bowl, right?
Yeah, I mean, he went to the Super Bowl, and I got to watch part of the Super Bowl. Before he got there, he decided to announce on Air Force One to all the reporters who were flying with him to New Orleans that he was going to put across-the-board tariffs for steel and aluminum, 25% on all imports.
Aluminum is the most fungible metal. Everybody can get in and out of it on a supply-demand basis. I have the stereotype of Alcoa from 30 years ago. What is the state of American aluminum in 2025?
There's one less aluminum producer domestically, one less aluminum smelter domestically than there was in 2018 when Trump first implemented his aluminum tariffs. At this point, the United States aluminum industry is deeply dependent on production in Canada.
You and our colleague Josh Wingrove have been breaking story after story on U.S. Steel, and I'm curious sort of where that stands. We were watching the White House last week as President Trump indicated there might be some sort of deal being brokered with the Japanese, such that they would invest in the company and not take it over completely. What's the latest on that? What does that say about this epic of a story that we've been following now for more than a year?
Right. Well, he came out in the same small press conference he did on Air Force One about the tariffs. He added that he would not allow for U.S. Steel to be majority owned by Nippon Steel. The feeling at this point among investors who own U.S. Steel is, am I getting my $55 per share offer that was given over a year ago? And more it's looking like the answer is no. Yes, great. An investment in U.S. Steel, interesting. But if you have held on to this stock, you don't care about an investment in U.S. Steel. You care about U.S. Steel being sold to Nippon Steel at $55 a share. As it stands right now, if we trust what the president has said, he's not going to allow that.
Does the protectionist rhetoric help in the market? I mean, I look at what shares of these companies did. Alcoa, as Tom mentioned, U.S. Steel, as we were talking a moment ago, they did go up after he threatened these. When he opines on this, does it have a kind of lasting effect on the value of these companies?
I mean, that's a loaded question. We'll see near term what it really means. You got to remember, like, why are these stocks up today? Well, they've been absolutely battered over the past year. Last year was the worst year on record for the U.S. steel industry of publicly traded companies since the first Trump administration. So they have a lot of room to grow, and I think any sense of protectionism coming into the market is a good feeling. Last week there was a big steel conference down in Tampa. A lot of the talk was, hurrah, the president's going to implement tariffs. And then when he didn't, I had spoken to a number of my contacts there who said the mood got very dour. So there are a number of people who had been expecting it, and now that it's back on the table, that seems to be what's going.
30 seconds. Where are we 6 months from now in your world?
Oh, I think it's impossible to know. There's a world where tariffs are still on steel and aluminum. There's a world where he is still doing bilateral negotiations with every country in the world, giving them exemptions or tariff rate quotas and all this other stuff.
Okay, I've got to leave it there. Jodo, don't be a stranger. This was great.
You can bring Tom to your annual review as well. He'll say what he said on air.
Did you get some guacamole last night?
Just a little bit, I did.
Okay.
Yeah.
Philadelphia Eagles, you got to play Springsteen, Streets of Philadelphia. Good morning, everyone.
1,000 miles just to slip this ski. The night is falling, I'm lying awake. I can feel myself fading away. So receive me, brother, with you, faithless kiss, or will we leave each other alone like this on the streets of Philadelphia?
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
The president wants lower interest rates from Chairman Powell.
You can make the argument that this is a really rich market.
With Lisa Mateo on markets.
Stocks are coming off another record high.
And Michael Barr with news.
President Trump signing a wide range of executive orders.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. morning, Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. We welcome all of you across the nation. Your morning commute on Apple CarPlay, Android Auto. I had a meeting Thursday with my people, and they said, SiriusXM is just killing it. Good morning on Sirius Radio, channel 121. Appreciate it. 99.1 in Washington. I'll talk to David about that in a moment. Bloomberg 1130, the tri-state area. And 92.9 FM. Getting into some baseball with Pete Abram over at the Boston Globe, pitchers and catchers. This week, David, on Washington and inside the Beltway, seriously, but forget about the politics of it. A huge body of Washington doesn't know if they have a job in X number of days or weeks.
No,
right?
And that's been some fascinating and sobering reporting over the weekend. If you look at USAID in particular, there are so many people who are working overseas, and maybe they've rented out their homes in the greater Washington area to accommodate them being there. Now they're being pulled back, and people's lives are kind of being thrust into this really extreme ambiguity, and I think we're going to see the knock-on effect of that for many weeks
But like
to come.
in Bethesda, forget about the politics, folks. FAA, NASA, EIEIO, all the name acronym thingies. Do you know where your mortgage payment's coming from August 15th?
It's a very good question, and it's of course a government town where so many people work for the federal government. And again, I think it's that ambiguity that's really startling a lot of people, and we see the efforts now through the courts to push back against some of the job cutting that we've seen. But safe to say there are many thousands of people in Washington attached to it who are dealing with some real uncertainty right now, Tom.
Kim Dawson walks in the studio. The market lifts. NASDAQ up 0.9%. We need a Bloomberg Business Flash from IBKR. Lisa Mateo.
You got it. Yeah, we do have futures advancing. Traders kind of assessing President Trump's pledge to impose tariffs on all imports of steel and aluminum. We were just talking about it. What it's doing is pushing up some American companies linked to the metals. Companies like U.S. Steel up 3%, Alcoa up 2%. We have Cleveland Cliffs up about 8%. NASDAQ futures leading the charge up 0.9%, 197 points. So we have Dow futures up 0.5%, S&P futures up 0.6%. The 2-year yield at 4.26%. That's down 2 basis points. And the yield on the 10-year 4.48%, and that's down 1 basis point. To commodities, gold rising to a record. Tariff talk kind of added to that uncertainty in the financial market. So we have COMEX gold up $2,924 an ounce. We go to oil. Brent crude $75 a barrel. WTI crude $71 a barrel. We'll go to shares of BP. They're up 7% in London. Elliott Investment Management said to have built a significant stake in the company. And then we go to earnings. McDonald's up 2%. Sales rose in the fourth quarter. Yeah, growth in international business actually made up for that drop in the U.S. And it's a big week for earnings. This week we're going to hear from Wendy's, Deere, Applied Materials, Coca-Cola, Kraft Heinz, CVS, and more. That is your Bloomberg Business Flash. David and Tom.
The ads. I didn't laugh yesterday except one moment. And David, I thought of Cam Dawson. It was the wonderful Dunkin' Donuts commercial. I wish they do them all year round. Thought it was great. And Starbucks shows up in the middle of the commercial looking for a coriander latte. Yeah. And I thought of Cam Dawson.
All right.
When you go to Starbucks, what do you order?
I'm not a big fan of Starbucks. And if you're asking me about donuts, I will go for Publix donuts every day of the week as a Florida native.
This is a Florida supermarket chain.
They're the greatest.
Do you know it? It's with an X.
They're like sweeter than Krispy Kreme?
It is Florida.
Okay, thank you. Kim Dawson joining us right now in the equity markets. And, I'm looking at year-to-date, Dow up 4%, SPX up 2.5%, NASDAQ, I'm sorry, extrapolate it out, it's a double-digit year. Do you model a double-digit 2025 for the equity market?
We think that it's going to be more like high single digits, but there's potential that you can see 10% rallies, 10% corrections. Our base case for 25 is a wide, choppy range where you could see rallies over the course of the year in these sort of risk-on moments, but that because you're coming into the year at such high valuations, you are very much primed to have that downside volatility.
Okay, I'm going to get volatility, but the answer is right now we're going up. Why?
We're going up because there still is this risk-on notion that you are going to see a benefit from policy out of Washington. You still are seeing earnings go up. So if you look at fourth quarter earnings, you went into earnings season expecting 12% growth. You're getting 16% growth for the fourth quarter. But watch this closely. You're actually seeing 25 and 2026 estimates for the S&P 500 get trimmed just slightly. If that continues, that portends a bit more of a choppy sideways market.
Peter Cheer with us from Academy Securities earlier talking about how he is kind of staying invested throughout all of this uncertainty and the waves of it. How are you approaching the likes of what we saw last night when the president was on his plane and floated what may be announced today? Sort of the ups and downs from a policy perspective when it comes just to uncertainty, if we could chart that.
Yeah, certainly we think that there's going to be the vagaries of the market as we move through the year. And the reality is that unless we are thinking that these policies have the potential to significantly dent growth, then it does warrant you staying optimistic and invested in riding out the volatility. So watch things like credit spreads. We think credit spreads will be an important indicator of if you're seeing growth start to weaken. If they remain contained, it means that it's just equity positioning and valuation volatility.
Gura takes, it's like Scarlet Fu, he takes notes. Credit.
I go right there, credit spreads. There we go. Oh, no, thank you. Yeah.
Thank you. Continue, Mr. Gura.
EAGLES, yes. Right? Okay, very good. I was off last week, but noted the fact that you noted as well. In those Michigan data, there was the sense of consumer anxiety about inflation, where it's headed. What do you extrapolate from that, putting aside all the concerns about the politicization of the Michigan survey, whatever? How worried are you about expectations for inflation becoming kind of unanchored or unmoored?
It's certainly something that's on the Fed's mind. We do think you have to take the inflation expectations data with a huge grain of salt. First, it's very correlated to oil prices, so consumers effectively report what they see at the pump, even for long-run inflation. Interesting. Second, you have this huge divergence between Republican and Democrat reports on inflation expectations. We think, watch the independents. They've been stable. Independents are sitting at 3.3%. It's been the same for the last few years.
You've been great about, I got to be in the market. I got to participate. I forget about the David Gura political overlay right now of basically whatever your politics, total chaos. I want you to talk right now to someone in a 401k plan who have a 3 or a 7 or a longer term perspective. How do they maintain given the news flow?
Well, certainly we think that keeping that long-term perspective is incredibly important. And the thing that has to come with that is an awareness that volatility is opportunity versus something to be afraid of. And that this year is likely going to have its twists and turns. We're only a month and a half in and we've already gotten them. Given the starting point of valuations, you are not set up to be able to absorb a lot of bad news, but that doesn't mean you should run for the hills. We still think that there are good things happening in the U.S. economy, really strong things happening in U.S. corporate earnings, all things that support risk on assets, and see that volatility as an opportunity to add instead of something to run away from.
How wide is your aperture when it comes to equities now? Are you looking overseas, or is the uncertainty that Tom was just mentioning, I like to harp on, something that's kind of precluding you from doing that there's just too much of it and that kind of makes difficult investing in overseas markets right now?
Don't look now, but China tech is outperforming U.S. tech. And we've seen that's short episodic upside volatility in China tech over the course of the last few years, and you have a big rally and it gives it all back up. So it's not for the faint of heart, but we are seeing this shift in some leadership where we're seeing signs of life out of non-U.S. markets. We don't think it's sustainable unless you see a major dollar bear market. So we think you have to make a dollar call to really push into non-U.S. markets. And right now, we're not seeing signs that the dollar is imminently topping. So it could be more of a short-term trade, but we think you have to be there. You have to be looking because of the discounted valuations, even though that's not a catalyst.
So what do you do with Mag 7 right now? They just reported the basic theme we got from Anurag and Mandeep was they can't keep up with the demand for AI. And with the huge investment numbers we're talking about, do you just maintain Mag 7?
Well, we put out a note this morning that said maybe it's not the Mag 7, but it's the Lag 7. The Mag 7 has traded below its 50-day moving average. It's starting to show some signs of a weakening trend. And if you look within the Mag 7, there's a lot of dispersion. So Microsoft has been flat for a year. It's gone nowhere.
Why?
Because you've been cutting earnings estimates and because they've seen such a huge increase in CapEx. The numbers are wild. Microsoft has 3x'd its CapEx over the last 4 years since 2021. So its cash flow has been weaker, but its operating profit is very strong. So we think investors are starting to lose a little bit of patience with all of this capex that hasn't necessarily materialized in significant uplift in returns.
How do you respond? I got one final question because Haskell just walked in the room. How do you respond, Cameron Dawson, to people that go, I can be solid in munis, they're formal tax-free, whatever they are,
feels like a setup.
Versus an equity exposure?
Well, as a firm that builds custom portfolios for our clients, it really depends on your liquidity needs and your risk tolerance.
You sound like a lawyer.
Well, look,
are equities going to outperform formal tax-free munis?
Over the long run, yes.
Does feel like a
But
setup.
the equity risk premium today is extraordinarily tight.
Okay, so you're all munis this morning?
No, we maintain a balanced portfolio. We are still fully invested in equities.
The lawyers show up. I mean, we had a big sign
it's
up
like
here.
the ad for Homes.com from yesterday.
It's got the lawyer wave. Go away. Cam Dawson, thank you so much with NewEdge right now. Let's talk formal tax-free. Pat Haskell joins us now, head at Municipal Bond Group at BlackRock this morning. I don't do enough on muni bonds. Is there any, let's start with this, double tax-free, triple tax-free. Is there a value for a New York State resident to buy a Nebraska GO this morning?
No, I'd rather just stay at New York paper.
Keep
the state exemption. New York, despite some of the dysfunction in Albany, most New York credits are very solid. So we can get into the RIT versus Union College later on when we start to talk about the small colleges. But I would stay in New York.
I'm
here for this. I'm going to push my chair back.
Now you know that RIT has had Union's number in lacrosse the last few years.
Yeah, they have.
All right.
Yeah, I was actually in a meeting where they were going D1-ish, and the bill you had to build two AstroTurf practice fields.
Two.
To get up to a certain level.
Oh, wow. Oh.
And it was a capital commitment they made at Union College because of BlackRock, which was not made.
Yeah.
Trust it wasn't made at RIT. Continue, David.
Pat, how is the uncertainty that we've talked about at this kind of more macro level percolated down to munis about policy? Is it yet, or is it something that's been kind of immune to it?
The muni market follows but lags the treasury market.
Yeah.
So the 480 to 440 rally we saw in the last month, munis rallied with it, and they underperformed a bit. We outperformed a little bit on the sell-off on Friday, but overall, I would say that if you look at correlations over time, munis are the least correlated of the large dollar-denominated bond markets to everything else that's going on. Look, I think that I thought it was very interesting. The Treasury Secretary said that Treasury supply was going to be stable over the next couple of quarters, because that's one of our biggest concerns is that they start to term out the debt. The bill market becomes smaller as the composition of the debt. That gives us that push up towards 5% in 10-year note yields, and that I would say, in my opinion, would be an opportunity in the municipal market.
Cam Dawson talking a moment ago about her balanced portfolio. Talk a bit about sort of enthusiasm for munis from consumer investors. How appealing is it? How easy is it for people to get into these
I think
days?
people are getting more excited about munis and fixed income in general, because this is the first time we've had real yields at this level since the financial crisis, except for a few points of stress like the pandemic and things like that. So we spent a lot of time on the road the last few weeks. We converted our high yield mutual fund, which has an excellent track record today, into an actively managed ETF.
That's some news, Tom. He's flagging there.
And then we're really excited about it. So the HIMU, we lowered the fee by over 25%. Transparent, easy to access. The high yield muni market. Very excited about it.
Can you own munis within a retirement plan?
No, because you can own taxable munis.
Taxable munis.
But you would never when you already have your tax deferred. You're not going to put it. Yeah, you're not.
So then, how is it? Give me an example of a taxable muni that Michael Barr would put into his retirement plan.
I would say any of the BABs that were issued post financial crisis. There's Cal BABs outstanding, New York BABs outstanding. Some of those got called last year, but all those are high quality. Big insurance demand for that high quality long duration paper. There's not enough of it out there.
Okay, this is where I want to go. David's loaded the boat on 30-year bonds for the kids. What's the biggest mistake retail makes in duration or maturity of munis versus what the adults do?
I actually think the biggest mistake that retail makes vis-a-vis their curve selection is going too short on the curve.
Interesting.
Because if you think about it, the muni markets, we fund projects. Or a long duration market. Now, look, would I have said that at the zero bound of interest rates? No, but now I think having the opportunity to layer in these 8 and 9% after tax returns in the high yield muni market, I just don't think we're going to see that very often. And if it gets to 10 or 11%, you're not going to own a lot of equities.
I remember listening to Taylor Riggs, formerly of here, talking a lot about the muni market and all the projects could be. She left. There's more news for you this morning, Tom.
Can't take it.
What are the projects now that are sort of most of the funding is going toward? Where are we seeing the greatest interest in terms of funding projects?
Well, the biggest project on the docket for the next couple of weeks is the Brightline train out west, which will be a high-speed electric train going from Las Vegas to Los Angeles. So it'll be real. It's a large non-rated deal. It'll be very interesting to see how the market absorbs that. It's an exciting project, but it's a non-rated. It's a $2.5 billion deal. It'll be interesting to see how the market absorbs that one.
The ETFs for munis,
yes.
Is it showing interest? I mean,
yes.
Versus, I think of Nuveen years ago and unit trusts or buying individual paper. The whole ETF thing's picking up?
I think one of the things that people learned, especially after going through the pandemic, when some of the mass selling in March and April of 2020, is they want to know what's inside these funds. And there's a place for open-end mutual funds, no question. But being able to see the transparency of the portfolio every day is very attractive to investors. The other thing is, as so many financial advisors retool their practices and they're using models, ETFs fit very easily in the model. So the ease of use also is really nice.
Were you ever at Union College when it was 26 below zero?
Yes.
Could you walk across the Mohawk River?
That I don't know, because we probably hid in basements. But
or you were working on the sixth case of Utica Club.
I mean, there was they still let us have kegs back then, but and there was a lot of them.
Pat Haskell, thank you so much.
HIMU.
Yes, HIMU. Thanks for having me.
Very good. Thank you. Pat Haskell, really appreciate it. Head of Muni Bonds at BlackRock. Always some wisdom there to take advantage of tax-free bonds. Michael Barr was writing it down as a note.
I saw
Utica Club.
Oh, it says
a fine beverage.
Not the ticker, but the Utica Club.
With our news in New York City, Michael Barr.
Thank you very much, Tom, David, Lisa. President Donald Trump plans to impose 25% tariffs on all U.S. imports of steel and aluminum, affecting major suppliers like Mexico and Canada. The move is part of Trump's broader trade restrictions, which also include reciprocal tariffs on countries that tax U.S. imports, to be announced this week. The tariffs have sparked concerns from trading partners, including the European Union, which has threatened to respond firmly to any unfair tariffs. President Trump also said that he is committed to having the U.S. own Gaza, but could give sections of the land to other states in the Middle East to help in the rebuilding effort. Trump made his remarks to reporters aboard Air Force One as he made his way to New Orleans for the Super Bowl.
We may give it to other states in the Middle East to build sections of it. Other people may do it through our auspices, but we're committed to owning it, taking it, and making sure that Hamas doesn't move back. There's nothing to move back into.
Egypt announced Sunday that it will host an emergency Arab summit later this month to discuss new and dangerous developments after Trump proposed to resettle Palestinians from the Gaza Strip. The Philadelphia Eagles have won Super Bowl 59. The Eagles rolled over the Kansas City Chiefs 40-22. Back in Philly, this fan says it wasn't even close.
I don't think anybody expected this score, especially with Mahomes and the whole staff on Kansas City. I don't think there's any way anybody thought there'd be such a blowout.
The Super Bowl parade is scheduled for Friday in Philly. Finally, a tip of the hat to the Milwaukee Brewers. They have unveiled a patch they will wear on their uniforms this season to honor longtime broadcaster Bob Uecker, who died last month. The patch will make its debut when the Brewers open their preseason schedule February 22nd by facing the Cincinnati Reds in Phoenix. Global news 24 hours a day, and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, David, Lisa.
I forced the family this weekend, selected members, vet bill included, to watch the Bob Uecker Hall of Fame speech, which is one of the greatest moments and 150 years of baseball.
I've never seen players laugh that hard.
To see Willie Mays fall apart with what the gift, I never met him, full disclosure, the gift he had to take giants like that to fall apart was amazing.
Oh, I mean, like I said, you see him when he used to do the old Tonight Show with Johnny Carson. Yeah. He was hilarious. That's when I was first introduced to him.
Yeah, any of you have a younger persuasion, I can't say enough about 10 Minutes with Bob Uecker in Cooperstown, New York, a Hall of Fame speech, surrounded by these giants. And they can't even get through it. They're laughing so hard. It's like we are with Barr. From New York, it's Bloomberg's Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this futures report sponsored by IBKR. Will the U.S. CPI exceed 2.4% in March 2025? You can trade your prediction with IBKR Forecast Trader. The yes, recently at 60%. Buy yes or no and earn $1 if you're right. Go to IBKR.com/forecast. All right, we've got futures pointing to a higher open after stocks closed lower on Friday. We have the NASDAQ futures leading the charge, up 0.7%, 166 points. We have Dow futures, S&P futures up more than 0.5%. We have the 2-year yield, 4.26%, down 2 basis points. The yield on the 10-year, 4.48%, and that's down 1 basis point. The Bloomberg Dollar Spot Index up about 0.2%. On the calendar this week, inflation data, retail sales data, also semi-annual testimony from Fed Chair Jay Powell. Shares of Meta, checking with those, are up about 0.5%. It's actually on track for a 16th straight daily advance. On Friday, the stock broke the record held by Tesla for the longest streak of daily gains among Mag 7 tech stocks. Checking with Tesla, they're down nearly 1%. Shares of Charles Schwab down more than 2%. TD Bank said it plans to exit its equity investment in the company. And then shares of Nokia up 1% after word that Intel's head of data center and AI operations is leaving the company to head up Nokia. And finally, TSMC said revenue in January jumped 36% from a year earlier. ADR's up 1%, checking in with Broadcom, chipmaker, up 1% as well. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. David and Tom.
Lisa, thanks so much. Vanessa Friedman over at the New York Times, thrilled that she supported the show a number of times, writes up a whole thing on Taylor Swift and Yves Saint Laurent and, this
Givenchy, as you said.
Givenchy, very good. Yeah. Givenchy.
I learned from you.
The bag and all that. We thought we'd go to the fashion statement for the Philadelphia Eagles. Linda Dissel, a Federated, appearing today in what looks like leopard Versace. I don't know if that's true, but we'll go with it. Tell us, graduate of Wharton and Carnegie Mellon, the joy of an Eagles victory.
Well, some of my best years were over at UPenn, and I do have a special soft spot for Philadelphia and for their cheesesteaks over there. So yeah, we were rooting for them, and my daughter-in-law's from there. So what a great time it was last night to watch that game.
Very cool, and it really shows the basics of, as I said, bringing back the running game and all they did. I'm not a sophisticated at it, but I can figure out that we've gone away from 72 to 59.
That's right.
Where every game's a pass play. Tell us about tackle, run in equity investment right now, Linda Dissel. How do we responsibly move forward?
Yeah, it's going to be an interesting year. Obviously, we came into the year very strong, so you couldn't say that the market was inexpensive. And President Trump is famously known for being unpredictable. We at Federated Hermes think that his full agenda might really start to play out next year. So it'll probably be in the back half of this year that we start to get better clarity, which says to us that, and I know a lot of people feel this way, it could be a sloppy first half of the year. And that would actually be a good thing to let things settle out and to remind us all that there's more than just the Magnificent Seven stocks out there to buy.
Linda, how do you navigate that sloppiness that you describe? I think there are a lot of people just kind of looking right and left and trying to figure out which way things are going. What is your counsel to clients about how they should get through this?
Well, of course, we love it at Federated Hermes because it's a great time to be a stock picker. And it reminds us, as I said, that the broadening the market, what I would say to people out there is that it's more than just this area of the market. And we tried several times last year to get that broadening to stick. And we think this year it will stick, because if we just clear our heads and say, what's really important is the earnings of the S&P 500, the earnings of the companies within, and the earnings of the non-Mag 7 are going to start to creep up and get closer and close that gap, earnings growth year over year versus the Mag 7. So it seems to be far more safe to go in those waters and check out some other sectors.
Linda, I want you to talk to people scared stiff. I think the exuberance is clearly not there, even with futures up 32 this morning. But Linda, there's so many people in bond equivalents, cash equivalents, and that they just saying, I can't go in with the news flow. For those afeared, how do you participate in equities?
Well, history reminds us that diversification is the key way to go, which you reference are areas of the market, bonds and cash investments that actually pay you something and pay you something over and above inflation. So nobody is right or wrong in their risk tolerance. And so it's safer and it's actually more lucrative to be in those safe places. And though we're underweight on cash, it's a good place to hide. Yeah. But to remember that in the end, what my boss Steve Roth always says is up and to the right, and that's the history of this country. And that's the thing to remember is take a long view, try not to use this as a casino.
Yeah, Linda Dissel with us, folks, and we're going to come back with her. You're not going to believe the track record of the Federated MDT Large Cap Growth Fund. I'll give it to you in a moment. Right now, after team Super Bowl coverage, only Lisa Mateo can open the market. We can. It'll be interesting to see how the rebound. Green on the screen. Come on, stay with the theme. We're getting there. We're getting there. S&P 500, yes, up 0.5%, 31 points, 6,057. We go to the Dow, up 0.5%, 269 points, 44,572. And the Nasdaq, there it is, just kicking in, up 0.7%, 144 points, 19,668. We're going to the 2-year yield, 4.26%. Down 2 basis points. The yield on the 10-year, 4.47%, down 2 basis points. Commodities, COMEX gold, rising to the record $2,929 an ounce. We check out oil, Brent crude up more than 1%, $75 a barrel. WTI crude, $72 a barrel. And the Bloomberg Dollar Spot Index up about 0.1%. Can't forget to mention Bitcoin up 2.5%, just over 97,000. That is your Bloomberg opening bell report. David and Tom. Lisa, thanks so much. The 10-year real yield, 2.04%. Some real stasis in bonds today. A little bit of a dollar lift. Euro dollar 103.09. 103.09. We continue with Linda Dissel from Federated Hermes. David?
Linda, I wonder when you look at the panoply of economic data, this is a week when we're going to get more data on inflation. We had data on sentiment and jobs, of course, last week. Where you see signs of weakness such that you do, where you're paying close attention so you kind of assess the state of the economy going forward?
Signs of weakness are really starting to go away. There's 2 things that we can worry about. We can worry about a recession, and we can worry about inflation. And as goes a recession, the job market, you can call that result mixed. But when you look at those average hourly earnings up over 4%, and when you consider the revisions for last couple of months, why it's a strong job market. Let's look overseas. And overseas, I might have answered last year, overseas is where it looks weak. And we still do think the U.S. can outperform this year. But global earnings in the fourth quarter are up over 12%. That's the rest of the world. That comes close to what we are. So it's strong, actually. Dow up 300 points. Linda, you've got the Fed
Federated Hermes MDT Large Cap Growth Fund. I guess it's a bolt-on. I don't know, but it's Federated Hermes. It's growth. 1 year, 90th percentile. 3 year, 99th percentile. It's like Gura's kids' report card. 5 year, right. 96th percentile. I mean, Linda, why should people get off the large cap growth ship?
Well, Tom, I thank you very much for that commercial. Actually, our entire MDT complex is doing very, very well. And it just reminds us, you do have times where growth is in the leader seat and times when value isn't expensive and has its place. And as we speak of broadening out, we're thinking of particularly cyclical value, parts of the economy that you wouldn't call growth, but that will start to show their earnings do better as the economy does better. The difference this time is that you wouldn't want to be selling your growth. Just as you said, it is very strong. That's because technology is real, AI is real, and it's seeping through the rest of the economy. So that's why we can diversify and feel good about our entire portfolio.
Linda, hope to see you at the Philadelphia parade. She'll get over there. I mean, Belchunas is already
He's already there.
He's got front row
Got to get good
seats.
Yeah.
Linda Dissel, thank you so much. Greatly appreciate it. We're only talking to Eagles people today. We'll get to Kansas City here a couple weeks as well. I mean, it's a bull market. And David, do you sense out there Schiller-like stock market exuberance? I don't see it.
No, but you do look at the numbers, and we talked about this earlier. The ability to sort of see through the uncertainty is pretty astonishing. And I think having lived through the first Trump term and all that brought, I think there was much more of a whipsaw effect than we've seen in the markets this time.
What's the distinguishing difference? I have in my own head. What's the difference for you of Trump 2 versus Trump 1?
Well, a number of things. I mean, I think that there's less kind of internal division that we've seen laid bare in these first few weeks. We'll see if that changes over the course of the administration. But I think that we can get a better read on what he's trying to do. We know that there's less opposition internally to what he's trying to do. And, the timing is the thing that I think is still flummoxing everybody when it comes to tariffs or consolidation of these agencies or any of the other initiatives.
To me, right now, 8 years ago, we didn't know where we were 8 years ago. Right. And now there's a huge collective memory around his actions. We'll have to see. David Gura with that. And look to the big take. Gura's effort there in the land of podcasts. The big take. Usually the episodes are, they're longer than 4 minutes. So, it's substantial. Dow up 245 points. VIX 16.28. It's Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got stocks higher, investors kind of shrugging off tariff tensions. We also have the dollar strengthening, the Bloomberg Dollar Spot Index up 0.1%. Gold hitting a record. COMEX gold at $2,931 an ounce. So let's get to the NASDAQ, up 0.8%, 154 points. The Dow up 0.2%. The S&P 500 up about 0.3%. So what a way to start a Monday. Let's get to the yield space. The 2-year yield, 4.26%, down 3 basis points. The yield on the 10-year, 4.4%. 0.47%, down 2 basis points. Big tech contributing the most to the market advance. If you go to the IMAP feature in your terminal, the 11 major industry groups, the biggest pull from information technology, then it goes to semiconductors, and then at the top is NVIDIA right now, up nearly 3%, followed by Broadcom, up nearly 2%. But also you have materials producers, a big highlight. For example, U.S. Steel up more than 3.5%. And then we also have Alcoa up more than 3%. And finally, to earnings, we have to spotlight McDonald's up 4%. Sales rose in the fourth quarter. That is your Bloomberg Business Flash. David and Tom.
Lisa, thanks so much. David Gura and Tom Keene. And this is the guy you're going to see more of on Bloomberg surveillance this year than anyone else. Everybody, including the great reporting by Bloomberg, is riveted by this new gambling in America. Brian Egger is the expert on this with his acclaim, particularly the Wall Street Journal best on the street analyst a number of decades ago, and institutional, the II report. He has a couple awards from that beauty contest. Absolutely bulletproof on gambling. So, and the reason I haven't said why Sweeney's not here. Clemson beat Duke.
Yes.
How much?
Were he here, I would have brought that up because I'm just struggling for something to make him feel bad about his Duke Blue Devils. But
okay, Clemson upsets Duke. How much college kids betting was there on that game versus 2 years or 20 years ago?
With more states out there, with 33 mobile states, they're reasonable to assume more of it. And this is a big issue. It probably comes into play when we get to March Madness. But you're absolutely right. Advertising towards college-age students, where many of them are under the age of majority, that's a serious issue. Yes.
The NFL's addicted. The NCAA's addicted. The kids are addicted. People like El Mateo over there are worried about it. Where are we, Brian Egger, in 36 months?
Yeah, well, so I mean, this is an issue. It's been an issue since 2018. The Supreme Court allowed for unrestricted sports betting. I think the industry is taking steps to make sure when they have advertising, college campuses, that there's restrictions on it. But I think this is, it's a significant issue we've written about, particularly when you get into the NCAA men's basketball tournament, women's basketball tournament, where there are so many games and so much betting for, the concern is, I think, two things. One is betting by underage bettors, but also when you have these prop bets and pressure comes to play on some of these college athletes about how they perform.
Right.
That's a dangerous area.
Or a school could go out and hire a former NFL coach.
Say it might.
With an underage girlfriend. Continue, David.
Well, for me, I would just say, for both of you, I think I see it in baseball. And yes, there's the anxiety about young people getting into it, but just the way that you watch a pregame show now for a baseball game, if I watched on Apple TV, for instance, not the whole focus, but a large chunk of the focus is on betting on that particular game. Right. And it's just a totally different framework that I find foreign. And then, my son's watching it. How do you explain what they're talking about? Of course, baseball has been something that's so driven by data and rests on data for so long. It's just a different way of looking at games.
Yeah, and this has been an issue. I've followed gaming a long time, and even go back to the casino games. As soon as it went online, there's this notion, which is true, that it drives entertainment viewership. All this is true, but there's always been concern, and I think there needs to be concern about either targeting people with addictive habits or underage bettors. And as we get into March Madness, so have me back then, hopefully. Yes. We'll talk about that because we've got a lot of college games.
Have you back then? You're on next week. Continue.
Yeah, March Madness, right? It's around the corner.
When you were on a few days ago, we talked about the game last night, and you did such a fine job of setting up the fact that it was in Vegas last year, it's in New Orleans this year, and not only do you have all of the external betting that's taking place, but these are cities that have casinos as well. So here we are, 12 hours out. What do we know about how all of this went down?
It's also about the business aspect from a gambling perspective. The outcome of the game itself, bit of an Eagles blowout. The Eagles more than covered the point spread. I think from a sportsbook business perspective, it was kind of mixed. The good news is that there were a lot of futures bets on the Chiefs taking the ultimate title. They did not. There were a lot of proposition bets on people like Saquon Barkley and Travis Kelce scoring touchdowns or running massive rushing yards, and they generally did not. Those players were contained. So in that sense, the sportsbooks fared well because some of those bets did not pay off. But the over-under was disappointing because a lot of people bet the over. We got the over, right? Mm-hmm. So that's bad for the books. It's not the over I think most people expected.
Right.
But that's a bit of a mixed bag for the books.
How do you respond, Brian Egger, to people saying the United Kingdom has been betting for years, there's no problems there, we can be like United Kingdom in betting. Do you buy it, or are we different?
I mean, so compared to the United Kingdom, the U.S. betting industry is kind of less mature because we've only been at this online and sports betting
the lottery
thing.
goes back to Queen
the lottery
Anne.
goes back a very long time, obviously. Sports betting, which is generally socially accepted, as we know it today, is really something that's only been happening for like 6 years, because up until 2018, it was mostly restricted to Nevada, right? So along with that growth and proliferation and mobile access comes the need for safeguards and being prudent about who has access to these books, right?
How do we police why Travis Kelce dropped the first 2 passes?
Well, it's difficult to police some of the stuff because 2/3 of the bets on the Super Bowl were these prop bets.
Yes.
Not just the over/under, not just the point spread bets, but the actual proposition on players. And, that can be a lot of fun. I mean, the arcane things like whether it could be yellow, green Gatorade, which it was.
It was.
That
I
was
saw
bad. That was bad for the books.
And with like 2 minutes to go.
So there was a lot of prop bet fever, and that could make the game more interesting for most people.
The Taylor Swift prop bets.
Yeah, prop bets. Not on FanDuel and DraftKings.
I promise, the next time you come back, Lisa Mateo's going to drive the interview because she's really fire. And I think a lot of America feels like Miss Mateo. What about our kids in this? So, Lisa, the next time Brian darkens the door, you're going to drive the interview. Brian Egger is going to be a fixture with us this year and in the future. He's senior gaming and lodging analyst at BI, and as I've said, arguably the most important person in the building here at our world headquarters. Brian, you got to get up because Michael Barr's got to sit down and explain to us how much money he lost since the Lions didn't advance. It's unbelievable. Brian, Michael Barr's sleeping in the garage. It's so bad.
Oh, no.
I mean, remember the Bills, the Lions, they were favored?
I remember that, yeah.
Look what we got.
Well.
I'm in the camp. Somebody said with wisdom, maybe Damien, that the Chiefs, they won so many games just barely during the year. And boy, did it catch up yesterday. Dow up 100 points right now. We need to be quick with our news in New York City. Michael Barr.
Thank you very much, Tom, David, Lisa. President Trump is promising to make good on his threats of sweeping tariffs. On his way to the Super Bowl, the president told reporters on Air Force One that he will announce 25% tariffs on steel and aluminum today. We get more with Bloomberg's Bill Ferries.
But interestingly enough, 2 of the countries that would be most affected by that would be Canada and Mexico. Of course, he's already threatened 25% across the board tariffs on those countries. That's been delayed until early March. But this would hit them the most. And then it would also hit countries, including allies like South Korea, Bahrain, and Australia. So pretty wide range of countries that would be affected.
Bloomberg's Bill Ferries. Fans shouted, "Fly, Eagles, fly" from the stands. The Philadelphia Eagles crushed the Kansas City Chiefs in the Super Bowl last night, 40-22, and it wasn't even that close. Eagles offensive tackle Jordan Mailata spoke to CBS about being on the biggest sports stage in the U.S.
This is just too surreal to believe. Can't really put it to words. It just doesn't feel real.
And advertisers turned to star power for some of the most expensive ads ever shown during last night's Super Bowl. About 80 Super Bowl spots cost a record $8 million for 30 seconds. Actor Matt Damon and soccer sensation David Beckham toasted Stella Artois.
You drink Stella. I have taste, David.
Another ad that people have been talking about, the Hellman's Mayo commercial with Meg Ryan and Billy Crystal. Global news 24 hours a day, whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, David, Lisa.
You were talking about that one. You like that one, the Mayo one.
Yeah, I thought it worked. I don't know. I mean, at least half of them, you looked at the commercial and you go, I don't get it.
Or you don't even know what they're promoting sometimes because it goes off on these tangents. I'm like, what was that commercial about? Who's that for?
I just, as like I said, I think it's like 2 audiences out there. There's a young... I mean, what do you think, Gura? You're the hip one in the audience.
There was some surprises. It strikes me you've seen a lot of these ads already, or like variations of them. These were longer versions of it. But
the Dun Kings.
Yes,
they were back.
I wish they would do that.
You want more of that? Okay.
Dow up 91 points. Bloomberg surveillance.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everybody. Darkening the door right now. You know, this week is sort of an off week for them. Usually, into CPI, it's like, a 20-hour work week. But this week it gets onerous and heavy. Got CPI, got retail sales. Michael McKee joins us as well. Mike, the way I survive is Vince Gall, Craig Sterling writing up Eco Week ahead. How does Jerome Powell's Eco Week look, or has he been completely subsumed by politics?
Well, that's going to be the interesting question. Going into a Humphrey Hawkins testimony that the Fed chair, no matter who it is or who the president is going to try to be as anodyne as possible in their opening statement because they don't want to create news. In this case, it's hard to think of what Powell could say that would override anything coming out of the White House. He's basically going to fall back on what he's been saying. What they've all been saying is, we don't know what the president's policies are going to be, therefore we can't model what impact they're going to have on the economy, so we can't know what we're going to do.
I know that you listened to the interview last week that Bloomberg had with Scott Bessent, and something he revealed during the course of that is he's shared a meal with the Fed chair. The two of them have met since he's been on the job. Is Jerome Powell able to ascertain anything about policy direction from Scott Bessent, or is he dealing with the same uncertainty and ambiguity that we all are?
I suspect that he doesn't get much out of it. Now,
save for the free meal.
The lunches, it's been a tradition that the Fed chair and the Treasury secretary meet every so often, every week or every other week or something like that for lunch. So that's not a surprise. But my guess, and I think that most of the people who follow the White House would say, that Scott Bessent doesn't know what the president is going to be because the president sort of just wings it. And so there's probably not a lot that Powell can get out of him. And, they're supposed to talk about what the overall economic situation is.
Economic gestalt.
But I don't think they give each other secrets.
John Tucker, I can't keep up. I got Anodyne McKee and Gestalt.
I got my thesaurus out.
Get out the Merriam.
They're too
Webster.
smart.
Here's what I want to know. DI's in retreat. Everybody made a huge deal about the Super Bowl and companies and DEI and all that. The Fed had a moment 3-4 years ago where they were very sensitive about politics and society. Have you seen evidence within your serious reading that the Fed is walking away from studying our politics and our society?
You get that impression. They have scrubbed DEI from their website and
I didn't know that.
For the most part, not talking about it. And the theory is that they're going to focus. They're going to pick their battle, and their battle is independence on monetary policy. But the one thing you have to note is that last week, Philip Jefferson, the vice chair, gave a speech in which he said that we need to pay attention to the lower income people and how they're doing as part of our monetary policy, which is what their policy's been.
I got a minute left. I'm going to editorialize, and McKee's going to respond. I have seen no one who's done DEI better than the Kansas City Fed at Jackson Hole. They have been superb about modernizing that institution around the pressures of society. I mean, that's a Fed accomplishment as far as I'm considered.
They do have a very wide selection of guests, and they have made an effort to do that. And the interesting thing is every year the women who are invited take a picture together, and the group gets bigger and bigger and bigger every year.
Folks, I mean this. Forget about your politics. I don't care what you think about this, that, and the other thing. Who was it? Honig did this? Esther did this? Who did this?
It really started under Esther, I think.
Yeah.
But we'll have to see.
It's something to see.
Have to see if the Philadelphia Fed can respond.
There you go. I was just glad that when you said you were going to editorialize and have someone respond, it wasn't me. I get worried when you say that.
No, I just McKee's lived this. I mean, I'm associated with Jackson Hole, but he's hiked every trail. Eagles, Chiefs, how'd you do? You can't go for the Chiefs.
I didn't really have a dog in the fight, but I was happy with it was the most boring Super Bowl in years.
This is the scene where Mike McCain walks up the steps in Philadelphia.
We loved Kendrick Lamar.
Eagles.